Everybody seeing that okay? Being weird for me. Let's see here. Oh, that's the wrong direction. Very confused. All right. Sorry about that. Technical difficulties early on a Saturday. We'll call that a win. All right. How's everybody doing today? Let's see the chat here. Got a couple hellos. Abe from New Jersey, Louie from Atlanta, welcome in. Lola from Nashville. Kathy says, good morning, everyone. Good morning to all of you. Thank you all for being here. I'm really excited to be doing this. For those of you who are new, if this is your first roundtable, let us know. We're very excited and glad that you're here. If you've been to a lot of these before, would love to hear that too. For those who haven't been to a First Saturday before, we're going to start doing these every month. We started them last month, and last month got derailed a little bit, as we'll talk about. But our goal with these is just to give you kind of a roadmap for the month ahead. Our experts are going to come on, tell you the things they're watching out for, the big narratives they're watching, some of the stories to be mindful of, maybe some tickers and trades that they're being going to pay attention to, and just kind of, give you that resource at the start of every month to sort of reset, reconsider where you are, and start again with a fresh set of ideas in this case, May. So Carl says, good morning from Omaha. I'm here, not at Warren Buffett show. Well, thank you, Carl. Love that. And Aaron says, good morning from Oregon. Kathy says she's checking in from Texas. So thank you all for being here. I love being on with people from all over the country. It's super exciting for me. I'm from the Midwest originally, St. Louis, but now living down here in Jacksonville. So welcome everybody. I don't know why the slides really don't like me right now, but let's try that. All right. Welcome everybody to First Saturday. Thanks for joining us today. Our goal, like I just said, is to give you a roadmap for the month ahead, including this week's Fed meeting, key earnings events, and much, much more. I'm Stephen Ground. If you've never met me before, thank you for being here. I'm the editor-in-chief at Prosperity Pub, which Google Slides never likes to think is a real word. I'm thrilled that you're joining us here today. This week, I've been really focused, if you've read any of my newsletters or anything, on one key chart that I think is really fascinating, and it's this one right here. You can take a look at it. What this is showing us basically is the percent of days when the S&P 500 has seen a move of at least 2% or more up or down. And you can tell that it's not, we're not at historic levels here like we saw back during the housing crisis in '08, where it was nearly 1 in every 2 days where the S&P 500 moved that much, but we're definitely elevated, right? We're at levels we haven't seen since 2022, the bear markets, and we're getting a 2% move about 1 in every 4 days, 23% of the time. When this chart was created, I got it on Monday. So, I didn't do the math for this week, but it was a fairly big moving week, so somewhere still around there. Now, again, not historic levels, but they are the worst if you want to look at it that way, levels highest since we've seen since 2022. And all of that volatility, I don't think it's a bad thing. I think there's huge opportunities there, but it's definitely making your trading more difficult in ways you might not even recognize, especially if you're new, especially if you're not experienced with options, which, as you probably know, I am not as experienced with options as the experts we're going to have on today, which is part of the reason I love doing these, is I love learning from those guys about how to do options the right way. And part of what we'll do today is talk about how to trade in those kinds of environments. Now, we also have a major economic event this week, which is the next Fed meeting on Tuesday and Wednesday. Wednesday is the day that we'll see the potential market shock at around 2 p.m. when they actually announce the rate, and Fed Chairman Powell has his press conference. This week, we saw mixed economic data. Early in the week, GDP shrank by 3%, showing off, the very first signs of what tariffs might do to the economy. It was very fascinating that day, I think, because the markets sold off hard to start the day when that news came out, and then by the end of the day, they'd recovered and were actually positive, which I've been talking about, I think was a really, positive sign for where the markets are at right now. It means to me that investors are looking for reasons to be optimistic and not looking for reasons to be scared and sell off. And then late in the week, yesterday, the market surged on a strong jobs report, which also led President Trump to once again pressure Powell to lower rates. The markets are hanging on to every bit. This is an old slide that should have been deleted. At present, investors think that Chairman Powell won't lower rates. You can see
Right.
the graph here. Good morning, Lance. How you doing?
Well, I'm paying bills, so that's fun.
That's a lot of fun then. Thanks for
I,
being here. Still excited to have you.
I thank you. I'm paying Oprah currently.
Are you?
Does anyone know who Oprah is? Let's see. Not Oprah Winfrey,
I
but
know Ann Oprah. I don't know if it's that.
I got an email from Oprah asking me to pay her an invoice. The Oprah, it's not Oprah Winfrey.
Oh, there we go.
It's Oprah, the Option Price Reporting Authority. Mm.
Oh, there we
Oh,
go. Jack got it. Options feed.
yeah, I used to have to sign them, or I used to have to send them a wire
Mhm.
every month, and now they have a website. The problem is I forgot what the website is. Uh, but I
What?
used to have to go to the bank every month to send them a wire. Uh, and now they have it online. Thank goodness. Because I was
Got
paying like a
dragged.
$25 wire fee every month.
Yeah, they got dragged kicking and screaming into the 21st century.
For real. And now it's saying I have, how am I supposed to know which ones are due? Paid on 4/2. Oh, it's May 2nd. Wow. All right. Well, so now I'm gonna have to pay. Why isn't it on my invoice? Hmm. Payment date 4/2. Wait. This about Oprah invoice. Why is it not on there? Well, don't I have a reoccurring payment? I think so. Payment name. Uh, all right. Oh, Steve, we're getting started here and
7
um,
minutes.
yep, there we go.
Yep. Plenty of time to figure out an Oprah payment, I hope.
I know. Me too. Uh, let's do. Oh crap! I gotta get my credit card number. Uh,
Well, you want to go do that and I'll introduce you and get us ready here?
let's do that, Stephen.
All right. I'll see you in a few minutes.
Or I might have it on my phone.
All right. Um, I'll just keep rolling here for a second with these slides. There we go. And as I was saying, the Fed Watch right now is projecting a very low chance. 97% of investors believe rates will stay the same, according to the Fed Watch. So um, there's very little expectation that we're going to see rates lowered, or certainly there's no expectation we'll see them raised. But President Trump's still hovering over Powell's shoulders. Who knows what kind of fresh volatility Wednesday's meeting will inject into the market. Now, rewind 1 month with me. 1 month ago, we kicked off these First Saturday Roundtables in the immediate wake of Liberation Day. The markets were in crisis at the time, and our sessions became about, how to help people through that immediate crisis we found ourselves in. 1 month later, maybe shockingly, you might be shocked to hear this, Friday's close was actually above the close on April 2nd, Liberation Day, before Trump unleashed his policy. Now, there's still a lot of questions to be asked. There's still a lot of uncertainty out there. Volatility is still technically a little elevated with VIX slightly above 20, but trending down. Traders are moderately fearful, but nowhere near the levels we saw a month ago. And I think there's plenty of opportunity out there right now, and we want to help you get back on your feet and find it. So, I'm hoping we can get back to having fun trading this month. And we've got three amazing experts here to help us analyze it. You already met Lance for a second there. He's the senior options strategist for the Trading Pub. He traded a $30 million account for a private hedge fund based in Florida, mastermind trader who revolutionized the use of institutional option order flow. I can't speak this morning. Developed the master indicator, news flow scanner, penny option scanner, and more, and created the 4 p.m. payout program built for trading these volatile markets, which has been having a lot of success. And I think you're going to get to hear a little more about here in a minute. Lance, pretty impressive resume there. We've also got Alex Reid. He's been trading and investing since 2018, studied economics in college before graduating to test trading strategies for a billion-dollar financial research firm. He called the Silicon Valley Bank collapse back in 2022. He called it portfolio poison and potentially saved his traders from 100% loss. He also recommended Palantir before it shot up 691%. And then last but not least, Chris Pulver has spent over 20 years in the markets as a trader, former money manager, teacher. He's an options chain analyst and derivatives expert. He's personally managed multiple million-dollar trading accounts and has been a diversified portfolio trader who's maintained year-over-year profitability from 2001 to 2024. So, are you all excited for this section and what's on your mind? Let us know your name, where you're coming from in the chat, and how you're feeling right now. And most importantly, start sending your questions for our experts because we're officially kicking off in 3 minutes, 2 minutes here. So
Sweet.
it's almost time. And Lance is back. Welcome. Did you get it figured out, Lance?
So I came back and I just got an email. I kid you not. You guys want to hear something crazy? This is a 100%. I will even share the screen if I have to. I just got an email to invest in Mr. Beast
Did you really?
at a $300 million valuation.
Oh boy.
Let me repeat that. 300 million, $300 million. No, pardon me. I lied. They're raising 300 million. The guys at All In have already got in on this, by the way, the podcast, at a $5 billion pre-money valuation. Mr. Beast has a $5 billion valuation. Oh, if you don't even know who he is, he's like a YouTuber and he owns the chocolate. And then Beast
the big Amazon show this year.
Yes, that he got paid 100 million for it. How do I say no to this investment? They're taking a 20%, a 2% fee, 20% carried interest, and then a one-time fee of 2%.
I mean, it seems like a no-brainer, I think.
Next steps, view Beast Industrials investment deck NDA required. This might be the dumbest investment I do, but I think I have to. How do I say no to this? I'm investing in a teenage, or I'm not a teenager anymore. Oh,
amazing. Chris, are you going to be
putting half the 300 million in?
I mean, this is all new to me, but I'm obviously going to close down all my accounts and get ready for this investment land. So I need some details.
I honestly think I am going to invest in it. I'll probably put 100K. Money I'll probably never see again. Or it 10x is my money. I think I have to invest in this. They're raising 300 million. I think Shamoff and some of the other guys have already got in, obviously, the early rounds. I mean, this is insane. I mean, I'm doing it. Why not?
It's private equity, dude. I mean, you can do whatever you want. You just
like,
take it, deleverage it, mark it up, get your 2%. It just sits until somebody else wants to buy it, so they can value it whatever they want.
It's like this. Would I rather put the money in Palantir weekly 150 calls where the stock has to pop like 25%, where I'm going to lose it all, or it's going to triple, hopefully, or am I going to do Mr. Beast? I think I have to. I just got to figure out when's the money.
Alex, if you joined late, we're currently talking about investing in Mr. Beast direct ways. So,
oh snap! Is that something you can do now?
Yeah, I just got an email at a $5 billion valuation.
I think I should make it clear we're not
300
sponsored
million.
for Mr. Beast in any way. This is
That's pretty crazy. I mean, it's probably a good bet. I turn off my history sometimes on YouTube and see the slop it's serving up. So Mr. Beast is always in there.
Zoom user says, just because John Smith jumps off a bridge doesn't mean you have to. I will say these YouTube, Kathy's here. These YouTubers, that Mr. Beast guy, I'm not like I don't have kids, young kids who watch it, but I did watch that Amazon show because I do like game shows. And apparently it was $100 million show he got paid for. And then the chocolate bars, apparently they can't keep on the shelves at Walmart. I think the kids buy them instead of Hershey's nowadays.
Yeah, he's taking over the prime from the Logan brothers.
That's what I was about to say.
Crappy coconut water.
All these
oh really?
Their food brand.
Wow. So they have Lunchables. So now they're not controlling, but now obviously if you're a young kid, you probably want to eat
sugar water and chocolate. That's perfect. Yeah.
Instead of, I don't know, the school lunch or something like that. This kind of feels like Euphoria, a little, bubbly, not gonna lie.
If you get your own personalized NFT with like Beast's face on it, then I would say it's definitely bubbly.
Oh,
yeah.
Gotta go in.
What's your investing options with that?
So it's a 20% carried interest fee, 2% management fee, and then like another 2%. So basically, I did OpenAI. I put an investment there. It was like 25%. I got crushed on fees. Yeah. And I did SpaceX too, but at least SpaceX has doubled in valuation from when I got in. But
are you locked in?
Yeah, I got in at like 109 a share.
How long you lock? What's the lock-in period?
Oh God, for
infinity.
Like I think it's like 5
space, dude.
To space, infinity and beyond.
That's right.
But thank God we invest mostly, in the stock market. It's instant liquidity than getting tied up like this.
Yes, I did not expect to kick off today with a conversation about buying shares of Mr. Beast, but hey, you never know. There's a lot of investment options out there. So thank you guys for hopping on. We've got Lance, Chris, and Alex this morning. Really excited for this to go through everything. We wanted to start out because it's obviously going to be big news this week with just kind of a lightning round about the Fed meeting. Give us your quick thoughts on, are rates going to stay the same? Pretty much everyone expects that they will. Or, are we going to see a surprise move? And how do you think everything going on with the pressure from the White House and everywhere else is going to impact the market? So Chris, let's start with you. What are you expecting Wednesday, and how should traders prepare, if at all?
Yeah, I think, timing could be interesting because the Fed might somehow this week, even though it's been telegraphed, they're going to pause through May. All the pressure that keeps coming out of DC. The Fed might have a message that's not too rosy for the market because they're also looking to pause in June now. Their actual probabilities have shifted. I can grab the screen later if we're going our little 10 to 12 minutes, but I was surprised this week to see the number shifted. We had a pretty high probability in June to look at that first cut. Now it's been pushed to July. The one thing that caught my attention this week was the last 2 or 3 days watching yields pop to the upside. So, I'm watching this stuff like a hawk because I have a house to close on in about 25 days. So when we had the 10-year yield down to about 4.12, I locked. And I still have a chance to lock within 15 days. But I think I might have caught what is right now like the best spot and the best rate. So my biggest concern for the Fed is Well, I don't think they're going to get pressure. Like pressure for the White House, as vocal as Trump is going to be, the Fed's going to do what the Fed's going to do. I don't think they're going to cave, because if they do, I have a feeling that last September's bond yield reaction would be the same as this go around too. I think that yields will go higher if the Fed starts cutting. And historically, you look at the Fed funds rate when they've gone on major cut cycles, the markets has responded very poorly. Like go back to 2000, go back to 2006, 2007, go back during COVID. It's like the market was already having its hissy fits when the Fed started to cut. Last year was different because we did cut 100 basis points, but the yields reacted opposite. So I hope that's not the case this year. That broke a 40-year trend. But that is my legitimate concern, that we're not below the yields pre-Liberation Day, or actually during Liberation Day. And I don't know if we actually get there. So inflation data is not like crazy sticky. But it's not. I don't know. It's just a weird environment where it's like Trump's wanting to take this victory lap about how things are good. First 100 days, he blames Biden. Next 100 days, he could blame the Fed. So I don't know. It's going to be a blame game. It's going to be a lot of narrative. It's going to be a lot of jawboning. But I'll be watching the U.S. 10-year yield, U.S. 20-year yield. I don't think the Fed's going to do anything in May. Lining up right now to not do anything in June, which July makes things really, really interesting, because that would be the tariff window as well. As soon as we go back to, okay, 90 days are up. What does that look like for U.S. versus China, U.S. versus world? And then we'll see where the Fed actually makes a decision.
Awesome. Alex, straight to you. What are your thoughts on, anything with the Fed or anything Chris said?
I largely agree with Chris. I think it's interesting. All the like sort of the macro stuff is pretty weird right now, because in response to the tariffs, right, all these companies, they accumulated a bunch of, like, basically fast forwarded their imports and everything. I mean, you can see here like 97 overwhelming 97% expectations they're just going to hold on Wednesday. And honestly, like, I don't see a reason now that they would cut. Like, if they're still operating on the same principles that they have been operating on. I mean, inflation, is not too bad. Again, like Chris said, we have like the next month, or in June, slightly rises. In July, it's even, maybe a little bit above that. But I think I don't foresee him raising anything. I don't really think Powell. I mean, it's probably obvious he doesn't really like Trump. And I think that I do think it's somewhat of a political decision. I think there's some political rub between the two. And he wants to obviously, ensconce his position as an independent person. So it's like Trump's going to screaming at the on the internet about how he has a cut. I think it's going to solidify a lot of the Fed to not cut. So I think rates are going to stay the same. Again, like it's a really chaotic time. Like, we're having, bonds selling off, the dollar dropping. That was like the first divergence. It wasn't the first divergence in history, like where they did that. So yeah, 10-year 4.3. Yeah, I think they're just going to stick the same.
Yeah, I tend to agree with you. I think the worst thing Trump can do if he actually wants rate cuts is to come out and demand that Powell cuts rates, because I think Powell is, wants to look independent, if nothing else. Lance, how about you? How are you feeling about the Fed on Wednesday? How concerned are you, if at all?
Yeah, a nothing burger. I mean, I don't think it matters at all, to be honest. There's still big earnings, tariff stuff. I don't think the Fed's playing a huge role. I will say, I think anything that can make the market sell off a little bit would be good. So maybe a little bit of complications, but I think just the market has been too bulled up the past couple of weeks. So any excuse it has for selling, I think would actually be really healthy. So hopefully we have some
9 consecutive days closing higher.
Yeah. Right. It's like the most in 20 years or so.
Yeah.
So hopefully the Fed does something crazy. I mean, I'm all for it. I think it's just, this is we need something out there to, cause a little selling.
I think what's interesting too is like I didn't know if let me interrupt you, Lance.
No, go ahead.
But it's just I think when the Fed started cutting, they cut 100 basis points, yields rose 100 basis points. I think we're kind of starting to understand that maybe the Fed doesn't have quite as much power over these things, right? Because they have to auction off these bonds.
Right.
It requires buyers. So yes, the Fed can cut rates, but if the sovereign debt isn't enticing to folks who want to buy these bonds, well, yields are going to go higher. So plus we have all the chaos of the economy. The GDP print numbers I think are a little misleading because of the tariff news. And I would like to see how the next quarter plays out really as he starts to solidify. So yeah, that's just another reason I'm thinking it's going to happen.
Awesome. Well, for folks who are just tuning in, this is First Saturday Roundtable, and our goal here is to kind of give everyone a roadmap for the month ahead. At least that has been our goal. Last month went a little crazy with Liberation Day, but now what we're going to do is we're going to give each of these guys an opportunity to kind of lay out their, expectations for the month, the things they're focused on. It's really kind of open-ended with what they're most interested in and want to share with you. So we're going to give them each a chance to do that. And we'll start, Lance, with you. I know you've been working on 4 p.m. payouts and you've been absolutely crushing it with that, which I think is a strategy, that's pretty much custom built for this market. And I know you'll be, excuse me, sharing a little bit more about that later. But what's on your mind now? What are you focused on? You say maybe the markets need to sell a little bit. How soon do you think that happens? And how long do you think it lasts?
Hopefully soon. Basically, I was a little shocked to see like Apple and Amazon down. Amazon actually went green on the day, and the Nasdaq was down a little bit. And then the news with China caused the market to surge overnight. And then we actually had some more news with China and negotiations, and basically trying to stop fentanyl. So some leverage there, but I just think this grind up has been very, very boring. So volatility has came out. The call option specifically, for example, Friday we looked at if you bought almost the when the first tariff news, when the market had that huge like 5% up day, it was April 14th. If you bought, let's say, S&P call options or SPY call options, and now we're about I think about like 6% higher than there. The call options are barely up in value. They're up like 20%, depending on what strike you did and expiration. We looked at May, for example, so May 16th expiration. So it's just been a slow grind. As volatility expands like it was, you have huge moves. Well, now volatility's contracted and you're having decent moves in the market, but it's not, anything too crazy. So that's been difficult from like a swing trading perspective, especially in the options. I just think we need to have some kind, it's almost too easy right now in terms of the people who bought, a couple weeks ago are getting rewarded. So there needs to be, I think, some more pain. And I'm not saying the markets are going to retest the lows or crash, but I think having a couple, 1 to 2% down days and some more volatility would be good. Right now, though, it's just market opens or gaps overnight higher, grind higher. I really want to see how bullish everyone is in the mainstream media. And if they're starting to say everything's safe again and to buy stocks, be a contrarian and start selling, I just really haven't tuned in too much into the financial news yet.
Well, I know Kramer said there's not going to be a recession, so I don't know if that
Oh God.
Oh really? Okay. Well, there is a recession.
Depression incoming. Depression of 2025 incoming. Come on, Kramer.
That poor guy.
Lance, can you explain for folks who might be newer why you think it's actually good that we'd see some red days and some, like, as you phrased it, pain in the markets, why that's actually healthy? Because I'm sure some people hear that and think, why would we ever want that?
Yeah. And I'm not saying, again, I put a lot of money in the market.
Yeah, right.
Over the past really couple of months or so, and now just literally getting back to break even. So trust me, I got my money tied up long, like probably most of y'all, especially if you're like in a retirement account stuff. But it just seems like there's too much complacency. And when everyone's leaning on one side of the boat, eventually the water's going to get in and sink it. So I feel like we just need to shake the weak hands out again. Right now, you have crypto going up. You have, FANG stocks mostly, or the Mag 7 stocks mostly going up. We just need a little bit of a curveball to hit, and that will cause some, I think, some people who have kind of just bought, we call them dump longs up here, just thinking everything's sunshine and roses, have a couple of days of a thunderstorm. And then from there, I think, we could go back into normal market trading. Obviously, we've had lots of China tariff news. We had some big cap earnings. And we're starting to finally, I think after this week, we still have like Palantir and a couple other big names. But after this week, that will start to die down, those earnings events, hopefully some of the tariff news. So we can kind of go back to normal market dynamics, and instead of being dependent on, news headlines or, oh my God, Apple is worried about tariffs, the stock's down. I mean, it's just kind of a silly environment right now. And the one thing I will say from a bull case, though, and I see some people in the chat mention it, the one refreshing side is you are starting to see small caps and mid caps really start to lead the way. So that would be like the IWM, which led the way on Friday. So that is, again, that's where I put a lot of my money in on this dip, correction, bear market, whatever you want to call it. So I actually do think long term that will probably be the best bet. So you go look at IWM for the small cap ETF.
Nice. That's a great stock for people to know. I know we've got a few believers out there in that. Anything else you want us to know about, Lance, and maybe give us a little tease for what you're going to be sharing at 11, because I'm excited to learn more about that as well.
Well, Stephen, since swing trading has been difficult, like I mentioned, I've been sticking, you would say, oh, you're day trading. Actually, really not. Basically taking advantage of volatility and what we call selling vol or selling premium. And we do that in the SPX and XXP are the tickers. And you may be saying, well, Lance, why aren't you doing the SPY or the QQQ or the diamonds? A couple reasons. One, when you're selling premium, you have risk. If it doesn't work out, you could take each option contract is 100 shares of stock. There's early assignment risk as well. So there's disadvantages, especially if you're trading a small account. When you're trading the index, like the SPX, the XXP is just 1/10 of that. There's no stock assignment risk. You're taxed actually at a less rate than you would a stock or ETF, and they're cash settled. So you don't have to manage it. You don't have to close it out early. You're not going to take a stock position or anything like that. So you don't have to worry about that if you're doing a small account. Right at 4 p.m., the trade closes. And since we don't have to buy it back or do any trading in the afternoon, right at 4 p.m., the trade is done. So it doesn't count as a day trade. So you can do this with a smaller account. You don't have the pattern day trade rule. I've just been preferring that at the moment because it seems like every morning we wake up, markets are up, a lot or down a lot. And it's almost impossible to predict, what's going to happen in the overnight session lately, because we have seen so much chaos. So instead of doing that, we just put on a trade at 10 a.m. and then at 4 p.m. win, lose, or draw, it expires. And we're just looking to collect a little bit of credit. So in the presentation, off $1,000 account, we usually aim for like 200 to 250 bucks. That's the goal per contract. So nothing crazy. I would say this is, pretty conservative, especially for me, but it's still something to do without sitting on your hands and saying, oh no, I'm going to wait for this market to pass or for the sunshine to come out, because, I don't think anyone knows that that's going to happen.
Yeah. I think
I'll
that's
say,
true.
Lance, I was listening to Lance on a few of these roundtables. I like SPX a lot, but I hate the strikes on SPX. So they're $5 widths.
$5 wide.
Yeah. So, the XXP though is awesome. $1. So, you don't have to, you can just take, it's just a really good way to do it. I really like Lance. I've had a few nice little winners doing those XSP verticals.
So exactly.
It's an endorsement. It's an endorsement for from Alex here.
Everybody. Well, yeah, and you can do the XXP. You can start with $100. That's what's cool too. And now there's real good So XXP is just 1/10 of SPX, and it's uh, a pretty cool product that the CBOE designed. And actually, on their website, they kind of did the homework for us. They talk about all the advantages of XXP and SPX over trading the SPY, which I think a lot of people are like, "What? I've always told I should trade the SPY." You're doing stock, yeah, sure. If you're day trading stock, but I mean you got to have a pretty big account, right? Doing 100 shares minimum of SPY usually to trade. I mean, you got to have, I would say, probably a 6-figure account to do stuff like that, which not all of us have.
Yeah,
right. And then assignment risk is really good on the European options. You don't have to worry about it.
Yeah, exactly.
So for everybody who doesn't want to worry about their trades or having to buy underlying shares, right? XSP is great. I love it.
Awesome. Well, I was saying at the beginning, I think, all the elevated volatility we see, it's not necessarily a good or bad thing. It's just an opportunity to kind of rethink your approach. And Lance, I think you're doing that. So excited to hear all about that at 11 here. But for now, let's move on. And Alex, I think actually you are next in the agenda. Let me just double check my work because it is still a Saturday morning and who knows where my brain is at. But yeah, what have you got for us? What are you focused on right now in terms of the markets and how you're feeling about everything?
Yeah, so I think it's going to be so you can see here, I mean, on shifting from XSP to SPX, which is how kind of like where I just like to do like the basic charting. Because I think, look, we closed above the 200 again. I mean, after this, I feel like we're going to have a little bit of, I don't know if this can continue. But we have options. These next 2 weeks are going to be great. Like next week we have, this coming week we have the FOMC meeting. So that's going to be it's always like a risky event there. But then you're getting into options expirations on May 16th. So I think these next 2 weeks, again, an endorsement of another little feather in Lance's strategy there is that we're going to have, it's going to be good for premium sellers these next 2 weeks as we get closer to the expiration, for longer term premium as well, like week out or 30 days out, if you want to do that. This is a pretty vertical cliff face where recovered above the 200 on SPX. I can see us actually moving up, and you see here we do have sort of I think if we do move up into May 16th, 5787 is a key resistance line here, and then after that we're going to see all the rebetting taking place. I think that is going to be when we start to see maybe a sell-off into June and forward. I do think we're going to see a sell-off. I mean, if you look at the big cap, I know the tech companies have been good, but again, the nuts and bolts of the economy. So Coca-Cola, McDonald's, Wendy's, I think those are better bellwethers. The markets aren't the economy, but these companies that are typically bellwethers of consumer sentiment, consumer confidence, consumer disposable income, McDonald's, they're just down. Like, for instance, Ford, right? So if you've gone to a coffee shop recently, you probably paid with one of those, little white terminals that's block. They had earnings plummeted, abysmal, lots of decrease in foot traffic. So I do think the consumer is pulling back. Again, really Q3 is after, like Lance said, after these earnings are done, like we're going to be starting to see, because everybody moved forward their inventory, right? So I don't think the effects are really being felt. We had the 90-day pause on the tariffs. That's going to end.
Yeah, when does that end, by the way?
July 9th, I believe.
Okay, July 9th.
So July 9th. So, that could be a really big catalyst for a further sell-off in the summer. But I think for the month of May, at least until May 16th, I do think we're gonna drift higher, but again, as we get closer to expiration, that could change as delta hedging starts going into effect. Everybody starts rebalancing their positions ahead of that. But for the short term, I think we're gonna. I mean, we've had pretty solid volume on SPY. At least I haven't looked at the SPX volume, but SPY's been pretty good. There was pretty low volume back here like last week. This week it was pretty solid. So I think we're going to kind of drift higher, reach a resistance line maybe of like 57.87. But after that, right after May 16th, I think then sort of we could see a reversal. And then, where we go down from there is anyone's guess. I do think we're going to go down though. Like VIX is, it's getting, I think what an interesting thing I've been reading about on the interwebs here is basically because of Trump, who he is, he can basically turn on or turn off this volatility nozzle to do whatever he wants, right? So, there's a big reorganization of the global economy happening with the dollar, with bonds, and depending on I think what Trump wants to do, they can basically click edit on this volatility chart right here and make it go wherever they want. He could say, we're not going to negotiate at all with China. I mean, volatility will skyrocket. Then he could say, actually we're gonna extend those tariffs. Volatility will we're going to extend the tariff pause. Volatility will go down. So, but again, May 16th is the most after FOMC, I would say May 16th is the most important date. As we get closer to that, then we're going to see some rejigging of everyone's positions, all the funds positions.
Can you repeat why May 16th? I think you said it earlier and I just missed it.
Option expiration.
Option expiration. Yeah. So all the funds are going to be, as we get closer to that, they're going to be delta hedging and.
Do you think we pin at 5,500 or 5,700? It just seems like the two big round numbers are just kind of prime for a pin, in my opinion.
Yeah, I kind of 57 around 5,700. I think in between this range, this is a nearer term top for us. Now, what's interesting though is, and people were saying this, the Trump put, right? So where is the pain point for the administration? Where are they not willing to really go below? I was really thinking back here in early April that we would hit, we would just keep on going down. Exactly. We dropped below 5, and it seemed like the rhetoric from the White House changed. And then we went on.
That was Goldman Sachs's buy position
at 5.
Yeah, 5K or 5K that's where they were like, okay, if we go down to 5K, that's where we're buyers to step in. They came out with a big note and everything, and then literally like a day or two later, that's when we had that huge 8% rally or so.
But that was also the basis trade blowing up and the 20-year yield going to 5% too. Right, that all happened in the same few days. So I think that was also the put. Is like, yes, we were down in the S&P 20+%, but you saw the yield spike up it basically blew up the basis trade, which is where most of the liquidity in the bond market is, and that was really disruptive for we're still not back to those post-Liberation Day lows and yields.
I think a few Japanese hedge funds sacrificed themselves. They died for the cause, man. But I think that so I think we're going to see a bounce down around here, sell off when we get up here. I do not think we're going to hold this 200 DMA. I do think that this 5,000 though is the resistance line. Again, if we do start to sell off like into July, we're going to see this is going to be a key level to watch. The 5,000, right here where the Trump put was, where the what did you say, Goldman Sachs put was?
Yeah, the Goldman. Yeah. So let me ask the other side of it, right? Because we always want to look at two sides and play the other hand, not just our own. What happens if next week or the week after, all the tariff news, China caves, everything's great, sunshine and roses, the whole tariff conversation's out the media, and what happens if the market just continues to grind up? Possibly to new highs or back to the highs, would that be the most painful trade for the market right now? Is just everyone misses out on this move and we just go back to the highs?
Yeah, it'd be the also the dumbest and most disruptive 20% discount we've ever had because of how
Yeah.
stupid it all played. It's like that nobody would be a part of that. Like I'm sitting on 60% cash right now, which is rare for me. Like I've since the I had the courage to sell a lot of premium during the April bottoms. Did a lot of ratio spreads, a lot of 1-1-1s, and like all those were out to like May 16. I've taken most of profits like last week, this week, like hundreds of trades off the table. I'm I hate to say it, like the melt up to all-time highs, so be it. But I would not be happy watching this go to all-time highs because it just
Right.
shows how stupid the whole correction was because it was all self-inflicted.
So when do those people,
But that's the
Chris,
pain trade, Lance, like you said.
right? So when do those people who have cash, like for example,
They get
I
in at the
blew my
top and
low,
they get
right?
bag holders at the top.
Right.
Yeah.
So like
Yeah.
I blew all my cash when we were down like 10%. I went all in on the market, right? And now I'm getting finally rewarded recently.
Right. Right.
Yeah.
But I didn't have more ammo to buy during when we were down 18%, right?
Right.
I didn't. I had to pay taxes and I had money tied up and stuff. So now I'm like you. I got cash on the sidelines right now. I'm iffy to deploy it. But if we continue to grind up and I'm looking at the market up 1-2% each day, eventually I'm going to say, damn it, I'm missing out on this market, right? And then trying to deploy it near the highs, I feel like an idiot.
Yeah.
Right.
I can't do. I won't do it. I won't deploy at the highs.
So,
There's no way.
so you have people who won't, and then you also have people who are going to be forced to because they're underweight equities, forced to buy when the market is safe. And obviously once it gets safe, we're going to be near the highs or up there again.
Yeah.
So that's the other pickle of the trade is I feel like maybe the bears aren't as aggressive as they were because they kind of got squeezed out, but we kind of need them to come out and find that salmon in the river and a whole school of salmon and start eating again to where some volatility kicks up and there's a little bit of fear. That ideally that would be perfect, but the markets obviously are not perfect. So it's a tough pickle right now to
tough.
be.
Yeah, it's a hard
I would
puzzle.
love. I want to buy some subscriptions. I'm curious to see so I can study the Vanna or Vana and some of the charm stuff because I'm curious to see how the hedge funds are balancing their positions on individual tickers. I mean, if you look not SPX, it's unweighted, but stuff like a lot of the index funds are weighted towards those max sevens. And I mean, I know some of them have done good. But again, yeah, tech stocks that you can just, sit on your couch and order Uber Eats and then watch the latest, season of White Lotus. Yeah, okay, maybe that's good, but that's not the foundation of the economy. Like this
right.
McDonald's,
it's not.
It will be in 15 years.
Yeah, it's coming.
With universal basic income, with humanoids taking every job, and AI doing 90% of what we do now.
Exactly, but the real stuff, right? The people that have always traditionally been the bellwethers of what the economy is, it's not doing good. I'm not. So this is.
But it doesn't matter. But that's the case, though. The stock market is not the economy.
It doesn't have.
I know.
But
you have Netflix.
But it really is when the pain is 60+% of households are actually participating in the stock market. I mean, think about how disruptive a 401k is. If anybody cares about watching a 401k and it's down 15-20% in 2025, and now it's just still clawing back. And I mean, so you say it's not through economy, but clearly it is. Like if you break the stock market, you're breaking the U.S. economy at the same time. You can't say that it's. I mean, that's always been the K-shaped recovery was since COVID, right? But this whole idea of we played hardball, we're trying to be like, oh, this is better for Main Street. Main Street won't benefit if the stock market crashes because that's quickly just going to roll everything to a recession. And what concerns me, and we've probably all talked about this, but what concerns me about Main Street recession or Wall Street is that This time, if we have major layoffs, and this is where probably the second half of the year, like September to December, is going to be really critical for me, is we've got hundreds of thousands of federal workers that have been laid off that have collected severance or will be going back to the private sector in September. If initial jobless claims and numbers look worse, and look at the revisions that came out on Friday for non-farm. The non-farm beat expectations, 138 came in 177, but the 230, 240 print was revised 40,000 jobs lower. So if this continues to trend higher, my concern is this time that jobs get cut, and tech's been laying off people for the last couple of years, like just 10,000 layoff here, 15,000 layoff here, that I don't think these jobs come back the same way. So we want to onshore manufacturing to what degree and increase in pricing. I just think that all this whole idea of, everything becoming AI driven, and that's the big future for driving margins and doing more with less. I just think that you're not going to have human jobs in the next decade, and this stuff happens faster. So I'm trying to be glass half full here, but man, it's really scary how this stuff, like if you break the economy, companies won't hire back if they don't have to.
Well, they won't need to. That's the other.
I know, and that's what's scary. Is like that's the reality, is they don't have to hire back.
So here's the other side of this then. Let's say job numbers look horrible going forward. So then that's just going to lead to rate cuts. Who's going to benefit the most from rate cuts? The high flying companies, the Mag 7s. You're going to have everyone sell or everyone get out of cash, because right now you can still get 4% cash in the bank, or in a high yield money market account. That money's going to come out because now you're getting 1% nothing again. So that money has to flow into the stock market. It's going to, what's the most, the Mag 7 stocks influence the stock market. So you're going to have those stocks rally, and then the whole cycle repeats itself. So the people who can and own stocks are going to benefit, because your Netflix, your Microsofts, which are Palantirs, which are almost at all-time highs, Netflix are going to, do very, very well. On the flip side, we have lower rates. The reason why I'm pretty bullish on small caps is they can get money, they could get financing. So those companies benefit the most. The issue is those companies don't need necessarily workers, because everything could be automated. And then that's kind of your other flip side of the coin. But does that really matter to the stock market? I don't think so. No. Then if we also looking to the market, kind of the other bull case is what happens when you start getting IPO euphoria. I see some questions in the chat. You have OpenAI go public. It's got to happen in the next 2 years. SpaceX, you're basically having two of the most valuable companies in the world. Probably OpenAI will be up there. And the most valuable companies in the world. And if you have an IPO boom, that's going to cause the whole market to go up, because people are going to love stocks again, and risk is going to be on. And if you have lower rates, so but
you're looking at a longer time frame there, right?
I'm looking. This is the bull case of why you shouldn't be scared of the market, even like right now. Short term, I do think there's a lot of headwinds, and quite frankly, that's why I've been, not to promote my own thing, but why I've been doing premium selling and these daily 0 DTE options. But it's very, very difficult to say the market's the economy. And you brought up this, Alex, everything's going up. Square or Block, where you pay mostly small businesses for like a coffee, where you're spending $7 on an iced latte, or $8, and then I tip $2. I'm spending $10 on a damn coffee every morning. And you had Starbucks with bad earnings, right? You have Ford going to come out with earnings, and Carvana. I talk to people in the car business. They're not buying $50,000 starter cars. A Honda Accord is $50,000. So it is like, if you're not rich, involved in the market, you're at a tough spot. And I just don't see that happen. I don't see that changing. So it's bullish for equities, but I guess.
But stuff like that's exactly, the Carvana example is a great example. I know a lot of friends rushed out, and that's what I'm saying. Everything like Q3 is going to be more interesting to me than the rest of Q2, because I know a lot of friends rushed out to buy a new, used cars, another car, used or new or whatever, ahead of these tariffs. Everybody saw this, and the dealers were like, "Oh yeah, you gotta get in." I just bought a car, and they were like, "You gotta get in before the tariffs hit." and I was going to buy one anyways. That was not really my decision. But I know a lot of people are, and they're pitching that at all the car dealerships. Like, you got to get in. So everything has sort of been moved forward. Q3 is when everything stabilizes. I think not stabilizes, but you start to see a clearer picture of like what are the impacts on the supply chains. What's the real economic activity happening, and that's what you just said. Carvana, right? Says price. It's all like the roosters are gonna come home to roost in some way, whether that's good or bad in Q3. So Q3 is really, that's what I'm looking forward to.
And I'm talking my book. I bought Carvana and Ford puts on Friday, so just full disclosure.
Right,
I
and
think
they
most
probably have
stocks go
better.
down.
They probably, yeah. So I gotta charge my computer actually here. I'll cede the chair here while I charge my computer.
Great. Well, I love this discussion. We'll get into a little more of it in Q&A, but want to give Chris a chance to get into what he has prepared for us before we get there. Chris, thanks for those insights. I know you've already probably dug into some of what you wanted to share, but take it away.
Well, I thought about, this current environment. I mean, we do have Trump as president. Last time he was president, we had a lot of disruption through 2016. 17 was a weird year because it was the first time in history that the S&P went up every single month with the lowest volatility on record. So every single month, the S&P closed higher, higher, higher. I don't think we're in the environment to say we're doing that again because we don't have the, fiscal side yet stepping in. We don't have the monetary policy side yet stepping in. So part of me thinks that we just had a volatility event. Like that's what August of last year was. I know that was a bit of Bank of Japan, but there was a vol event in July to August last year. Now we have, this trade war, self-inflicted trade war, whatever the hell comes out of that, I don't know. But volatility of, let's say that we do grind back up to the highs. I really mean this. I would be probably as angry as anybody with like how silly a 20% correction was in the S&P, a 27, 28% correction was in the NASDAQ. And look, I was buying. I was selling tons of premium. Like anyway, it's been a good ride up for me, but the fact of the matter is like I'm sitting on more cash than I usually ever am, and I'm not excited about deploying it. Like I'm literally so neutral right now that I hate it. And anyway, I wonder like if this is a melt up to get to all-time highs. I look at this, 2018 melt up to 2018 again, and then another crash. And look what this was. This was September 2018. I could see this year doing something very similar, where if we do get to all-time highs, that's also kind of the big reality check for the market. So, congratulations, you get to the highs. And as Lance said, maybe being a bag holder at the top, or like people think it's good to get back in equities when that could be the bigger event. And, look, I tried to keep this chart pretty clean. I have to build a lot of workspaces because, this is usually what I see every day, which is I can see all the price action, but a lot of people are like this chart is messy, which it is. So I'm trying to keep it really clean. Nothing good is going to happen below 4,800. The 5,000 level is a bit of an overshot when we bounced out around 4,830, but nothing good. If you zoom out of this chart, the integrity of this bull market in the US is completely hinged on not going below 4,800. Because unless it's a bear trap, anything below 4,800, there is no support in this market until the 2022 bottom, or possibly even worse would be connect the 2009 bottom all the way to COVID's crash. So that's my biggest concern, is if we don't hold these levels and we don't maintain the integrity of this bull market with this trend line, that we're talking about a 4,000 S&P or a 3,500 S&P. And nobody's going to have fun in that environment. So I think for right now, the market is trying to do what it can do best. The Fed is, I think that the markets are more evolved. I think that the Fed and the tools and the stress tests and the banking, like we should be more ready for a 2008 to be avoided. I don't know if we ever have that type of, financial brink like we did in 2008. But man, I mean, the shakeouts that need to happen, like this was probably a leveraging shakeout. If anything, it was so wild and crazy. And that's one thing. It's like Trump's president, man. I mean, we said, well, he could say this. He could say both. He could say we're not going to negotiate with China, and then a day later say we're going to negotiate with China. Like that's a reality, and that makes it so difficult. And you take, I think we threw this around in Slack, but I mean, did you guys see the widest dispersion in targets in the last like 25 years? Like nobody knows where these markets are going to go. So to Lance's point, I mean, look, the best thing right now is there are ways to trade this market. I mean, my personal services have been focused on daily and weekly trades. That's it. That's the only thing that's really performing well. That's the only thing I'm comfortable putting capital in because I'm taking little tiny nibbles and they're paying out really well with high win percentages. But my allocation was down here. When I got heavy in the markets, it was when everyone was scared, and I was too. I mean, shit, I was worried that the market's going to go further. I didn't know if we're going to have a 35% correction before we see a bottom. But I mean, to the market's kind of technical efficiency, we did bounce off of the 2021. This is the December, November to January, like all-time highs in 2021, 2022. We bounced right off it. And then 2 days later, Trump comes out, kind of rips the market up, and that was a relief rally. I mean, I was fortunate that day was one of the biggest single days I've ever had in my career. But it also just took a while to kind of shake itself out, and here we are melting up. So if I go back to this chart, I'm just going to share some quick technicals. I just measured some moves here. I mean, this market is technical at the end of the day. The market can always be irrational. That's the hardest thing, is like we're trying to rationalize something that can be irrational, but taking this low to high swing, higher low to higher high, that is where we are nearing right now. And so, Alex, you said this, like that would be a near-term top, and I can see the symmetry move playing out here. If this is going to be treated more like, instead of a symmetry swing, which is what I'm kind of hoping we have a little bit of a dip because of that. If this is treated more like a cup and handle, where we break this high and this market measures, well, that's this level back up to 61.73, which is getting back up to all-time highs. So I could see the case for either one happening. I think having 9 days in a row, which is, I think, the first time in 30 or 40 years that this has happened. I may have exaggerated the timeline, but it's been a long time since we've seen 9 consecutive closes
20.
higher. 20 years? Okay. So, but I also think of what was the top in Meta? 20 some consecutive days up.
Yeah.
So it's like, could we go another 8, 9, 10 days in the S&P? I guess we could. I hope that's not the case. But I think if we have a little bit of a head fake here, I did some sessions this week, called it no man's land, because to try to be a bit of a realist here, it would make some sense to me if the market says, okay, we are now back where all this mess started. Now we can see if there's some real justification for going higher, or are the bears going to try to dig, or maybe nothing happens. So I could see a nothing burger here in the next maybe 2 to 4 weeks, as it just allows positioning to happen, whether we justify all-time highs. But that's the tricky part, is the market doesn't have to justify anything. The market doesn't have to justify why we're at all-time highs, and it doesn't have to justify why we're down, 5% filling gaps on these last 9 days. So I'm talking kind of out of both sides of my mouth. It's such a confusing environment to think. I'm not excited about melt-ups every single day. I'm also not sure how aggressive bears would be. I think that the bears have plenty of opportunities to just step in for a couple of days and tame this little rally. But I think it's also, capped to the downside here, maybe a gap fill here. We're likely not going back to lows unless we kind of blow off the narrative again of how bad things are or are going to be. So that's the big pivot also from Bissett and from Trump, and just all the news coming out now is the U.S. isn't really playing hardball anymore. The U.S. has certainly softened the narrative, and that's what allowed this market to be really reflexive. But how it's been moving for the last 9 days has been pretty silly. And I will say Wednesday really pissed me off this week with that low GDP. We print negative GDP, the market gaps down. We go 2.3% to the downside. Funny story, guys. So I had a trade on Wednesday. We were down here we gapped lower. I put in a broke wing butterfly, grabbed 50% of that profit within the first 10 minutes of trading. I literally told traders all day, I'm like, don't call a top for the day. This is end of month, right? I'm like, don't call a top for the day. Well, in the final hour, I'm like, I could still get 75 cents for broken wing butterfly right there. So I put one on, and I put one on just above the gap. And if I zoom in on this chart, this is a 15-minute chart. Let me go to a 5-minute here. I watched this all the way to the close on Wednesday. And, usually if I take butterfly spreads or broken wing butterfly spreads, you have that potential profit trap at the end of the day. Well, I had to see, I took screenshots of this chart, screenshots of my Tasty platform, screenshots of where everything would have closed at 4 p.m. because I want to make sure that it cash settled where it should have. And it was fortunately within the profit trap that I had. So it gave me an extra $175. But my gosh, man, I went from having, $250 of profit to upside down $2,000. And then in the last 3 minutes of the day, it was like, I guess that worked out okay. But we just have some interesting stuff in these markets. I think the best thing you can do is take your bites, take your nibbles, use defined risk. Lance's program, I know. I mean, like, and Lance doing spreads now and doing premium selling. I mean, if the market increases in volatility, that service is only going to get more profitable because I mean, instead of pulling in $2 a credit, you can pull in, $2.50 to $3 a credit. So it's a good way to have. There's stuff to do that's still really good trades, really good mechanics. And Alex, you and I did a webinar this week. Same thing. It's like just having a good system, having a good strategy. You can find ways to make income in these markets. I'm just talking big picture here. Like, I'm not stoked about putting in a lot of capital right now. Although we could all see this chart. If this is a stall point around 5,700 or so, I could see the market pulling back. I could certainly justify a bullish pattern here, but this could also be the perfect head fake. I've been thinking a lot about where's the pain in the market. The bull traps and the bear traps are the pain right now. With as disruptive as this was, the pain trade has absolutely been watching this market melt up higher. And the painful trade going forward would be absolutely this market's going higher. And why is that? How about 10 weeks in a row printing AAII sentiment above 50% bearish? Like, these extremes of how bad sentiment still is and how the macro theme has changed to like, oh, this is going to be a W-shaped market and this is going to be a U-shaped economy and the Fed liquidity pocket this summer is going to be toast, and all these things could maybe be true. But until price action leads the way, it's like you just take your stabs, you take your bites, you don't do anything silly. I am sitting on some of the biggest cash positions that I've ever had. And I think for good reason, because I want to deploy it. At some point, it's like, well, I'll probably take some inexpensive hedges up here and see if this is let's say this is like the 2017 melt up. I'm just, talking parallels here. Let's say this is the 2017 melt up. This is the 2018 Volmageddon event. This is the melt up to get back to the highs in 2018. Well, let's say we did that again. Right. I mean, could you guys see something similar happening as far as price structure, where we have the market, maybe still going to all-time highs and then having this as a potential broadening pattern where nobody gets paid? If you get the tops, you're at a bull trap. If it comes back down to the lows, you're at a bear trap. And this market for the next couple of years doesn't return anything other than volatility. So I'm trying to think of like all these potential situations, because what I'm trying not to do is be blindsided by some random outlier event that is like, oh, I didn't see that coming. It's like, I would rather play, chess with 20 different boards and try to figure out, I think I talked about that at one point. I think I maybe planned on that at some point, and just try to position myself accordingly. So I'm taking lots of small trades right now, going after little base hits and doing well. I mean, I'm fine. I've got client accounts up double digits for the year, which I'm really happy with, because it wasn't fun. Literally a month ago, it wasn't fun at all, but here we are, like, we're fighting the good fight. That's all you can do. And the one thing you control in your trading is your risk. That's the only thing you can do. And I think if you don't learn that lesson this year, then you might never learn it. So I'm hoping that everyone that's been in like double leverage MicroStrategy and double leverage NVIDIA has realized that that's not the best way to play the market when there's plenty of opportunity and volatility and leverage already in the market. Just trade it, So anyway, that's me.
One of the things I think, sometimes we learn the most important lessons through hard circumstances, and in trading, I think that's definitely true this year. Sometimes, there's so many new traders, I'm sure even in this room, who have had a really rough couple of months, and, just try to look at it as a learning experience and an opportunity to grow and prevent it in the future. Thank you guys so much.
Can I say one more thing, Stephen?
Yeah, please.
So just as we mentioned here, if this goes up to all-time highs, it is going to reinforce you got to buy the dip. But my concern is that if we come back down to those lows, that we have a 2022 type sell-off where we do hit the lows, dead cat bounce, and then we have a fresh low, and then a fresh low, and then we actually have like a legitimate bear market at some point. At some point, like, the buy the dip will hurt. I mean, 10% was a good dip, and it was a 2-week recovery, and then it was a 15% flush. But the 20% dip was good. But every 4 to 6 years, we have legitimate bear markets, and I don't think this market's immune to having another big correction. And it could be, to another 20%. It could be 30 to 50%. So you would mention, Vanna and Gamma there, Alex. I'll send you a Slack message on a guy that I follow that talks about a lot of that stuff.
Oh, that'd be great.
You probably know who he is, but anyway, it's insightful because it shows that between futures and options, that's truly where you're seeing a lot of the big flows in the markets, and that is guiding price. So it is helpful to have that stuff, especially these big OPEX cycles.
Heck
Awesome.
Yeah, thank you.
Well, we've got a few minutes here before Lance takes it away to answer some questions. And one I liked from Ken in the chat that I told him we'd get back to is, do you guys think the markets will ever settle down as long as Trump is in office? Or is this, Chris, you were kind of pointing to, maybe we've got a longer cycle of just bouncing back and forth volatility?
I mean, do we not remember what 2016 to 2020 felt like? It's
Some
no
people
different than
don't. A lot
now.
of
I mean,
people weren't in
these
the
first
market
4 months
then.
feel like the same thing we dealt with for 4 years. It's like you never know, and I think that's what is difficult about a president that wants to be heard every single day, a president that's on the economic calendar every single week. You don't know what's going to come out of his mouth. You don't know what's going to be on Truth Social. You don't know what's going to be what. I mean, honestly, did correct me if I'm wrong. Did this actually happen in Amazon this week? Was there like a line item in Amazon that said like tariff price? Was that
It was,
real? Or was that
I
fake?
saw
it was
screenshots, but
their
I don't know if it was real or not.
I thought that was
it
totally
was
fake because
their
I looked on
competitor to
Amazon.
Wish that did it, I think. It wasn't, they have some subsidiary that's kind of more of the discount
Oh, okay.
kind of competitor to Temu.
Yeah,
So
I
it
just
didn't
thought
happen on
there's no
Amazon
way
proper.
there's no way that they would do that.
No,
And so anyway,
no.
it was weird because I mean, and we have a lot of stuff going through, our Slack channel and what's coming up from other people's findings. And I'm like, I just thought there's no way that I mean, and you've got tons of sellers on Amazon. Obviously, the convenience and logistics of Amazon is ridiculous, plus their AWS. But I just thought, man, that'd be silly if they did that. Like that's taking a really interesting stance when I mean, I don't think Jeff Bezos wants to be the bad graces of the president. Wasn't he
I think
wasn't he
that's
in
how it
at
got
the
stopped.
inauguration? Wasn't he one of,
Uh-huh.
7
Yep. And
megalomaniac billionaires that was there trying to talk about the future? And I'm
It
sure,
was
I mean,
on
how much worth has Elon Musk lost in
yeah,
this these last 2 months?
it was on Amazon Haul, apparently, which I
Haul,
did not
okay.
even know existed until now. We got
Anyway,
a couple of questions about gold. Do any of you guys have a strong opinion about gold? Or
it's
people should be
it's
watching?
very crowded trade to the long side. So
agreed.
I bought some GLD puts, closed them for 88%. And then if I would have held them, they'd be worth like 300%. So yeah, I it's just a crowded trade. The most crowded trade is long gold, short crude. So again, when everything's crowded, probably want to do the inverse.
Yeah.
Yep.
I do like the dips on gold, but my target is so much lower than everyone wants it to be because I'm just looking at, and probably Jeff and everyone knows Jeff here at Prosperity Pub. I mean, he's what he just literally the last roundtable, Stephen. He's just like buy gold, sell crude. That's what Jeff said. I mean, look, I'm all for gold, but I would say at the minimum, I want to see a correction towards like 3,000. I'm willing to kind of be very patient. I have exposure for the last 3 years in gold. I'm fine. I've got, and it's a small chunk that's up a bunch, and I'm going to keep it there. But I mean, the 200 moving average to me on the daily time frame that's down to 2,800. I know that's a big correction in gold, but I would rather wait to see if we can even sniff that out before I just go long gold again,
Yeah.
because I'm sitting on profits. I'll craft more trades and build some income strategies, but gold is also this year has been treated a lot more like a safe haven asset. This has been potentially that paradigm shift into non-US dominance. But it's like Lance said, it's a super crowded trade. I just look at the technical side. Lance, I'm not sure how well you timed the top there, but I mean, good job on it. It was a crazy trade just to short. It was a crazy trade, but I mean, I was thinking either we have a bubble that crashes gold or this actually starts to turn over. And it was an interesting turn around like the 22nd. So I'm not sure what really if the force was, but the dollar was beat up so badly. Gold was super crowded. But I personally like silver better. I think silver from a technical standpoint has room to measure 40+% to the recent highs, 79% to all-time highs. I mean, we have a 1980 and a 2011 high in silver nearly at $50, and silver's trading at $32. So to me, it's the poor man's gold. It's the industrial side. But if there's a gold and silver ratio, usually it catches up. So gold has been blown out where I think silver's a better trade to me.
We talked about that in one of our newsletters, I think this week or last week. But yeah, silver is not keeping pace with gold. Usually it's a little more congruent. So that's so if you're kind of worried about the gold trade, like Lance said, it's a little overcrowded at the top there. Silver is not a bad option.
Yeah, and it's easy to forget in the tariff war and everything else, but we're still technically early in the rate cut cycle, which long term should be good for both. Although, who knows what happens between now and then. Two quick questions, and then we will turn over the stage to Lance. Just saw two tickers that people have asked about. IBIT, the Bitcoin BlackRock ETF, thoughts on that from
I'm long.
anyone?
I think if you're lucky this year, we just keep melting up towards the recent highs. But similar to what we had in, I mean, I'll just quickly share my screen, Stephen. That's okay.
Yeah.
I've talked a lot about this. So if you look at Bitcoin, so here's my BTC chart. Once we hit this previous all-time high, it was a really strong level of support. I'm still looking for a bit of a pullback to add more to see if we can get to the swing highs. But similar to how this was, now that Bitcoin is a bit more securitized with these approved ETFs, this was an accumulation cycle. I think this run could be just a larger of that. So if you're a trader buying here, taking some profit on a swing, that's a great trade. I don't know if we necessarily go higher without having some type of accumulation. So maybe it comes back down again. And that's what I see on IBIT is I've been selling a decent amount of premium. I was long at these levels at $44. I put in a bunch of puts as well below that because we'd be willing to take some more shares. But if this just melts up to the highs, I'm probably taking some, option profit, and then holding wise, I'm just going to sit and hold it. I might actually trim some of my position. If it goes higher, that's great. But I think we're going to be more in like a sideways range. I don't see Bitcoin just necessarily blowing out without having the assets and equity markets going with it. So I don't know. I think what we saw this year is a lot of things are intercorrelated, whether you like to admit it or not. But I don't think Bitcoin's going to be its own moat where it's better than the S&P and better than the Nasdaq.
Awesome. And very last question that we had, and I know, Lance, you shouted out IWM earlier. Thoughts on small caps, RTY, IWM, any of that before we go?
Obviously the market holds, but I think small caps will lead if we get bulled up and continue to go higher and higher. I think that's the most underperformed index, the Russell 2000 or IWM, the ETF. So I think that one could, play catch up the quickest and rally the most heading into, if we continue this bull run. I like it. I like it the best out of the group out there. And then we had a few questions about like leaps and stuff like that. Is now a good time? I would say probably the worst time to buy long dated stuff after everything we talked about. So I would definitely say the short dated, kind of like we all said here, the short dated options, the 0 day, selling premium if you still can, and really short dated stuff is, in my opinion, the safest way to play everything right now, with everything going on, especially as we have option expiration next week, and then the tariff pause on July 8th. So definitely stick with the short dated stuff, like what I've been doing, Stephen.
Yeah. And you're about to dive into that. Let me say thank you to Chris and Alex. Thank you guys both for taking some time on Saturday. We really appreciate it. Chris, Thanks. I know it's like still barely dawn there, so thank you both for your time on a Saturday, and you all have a good weekend.
Thanks.
You too.
Awesome. Thank you, guys. And now we'll turn it over to Lance and Mr. David Mound. David, good to see you too joining in. I know you're walking us through what Lance has to share today. And for folks who don't know Dave, he's a guy that works behind the scenes here, obviously moderating a lot of webinars lately too, but one of the most fun guys that we have around. So you're going to have a great time. Wow. Lance, I'm really excited to see this. I know you're killing it with these 4 p.m. payouts. So let's hear it. Let's hear all about it. You've set the stage. Take it away.
Well, I thank you, Stephen. Yeah, I'm very, very excited about this program. We've been doing this almost every day since the middle of February. So real solid strategy if you guys want to do low risk stuff, not aim for the fences. We're not aiming for 500% or anything crazy like that. And we're in the trade at 10 a.m. and out the trade at 4 p.m. There's no, crazy day trade. We don't have to time the markets, nothing like that. So volatility is good for the strategy, and that's what we're going to continue to do going forward. So welcome everyone here, and thank you, David, for hopping on. I'll let you take it from here.
Absolutely. Well, just a quick friendly reminder for everybody that the performances displayed are from live published alerts between 2/20/25 and 4/3/25. This is not historical backdated stuff that we researched. These are live trades. The win rate has been 96.6% on the options with an average return of 29% over a 6-hour hold time. Despite the success of the strategy we've seen thus far, of course, we can't guarantee future results using the strategy displayed. There is always a high degree of risk involved in trading, so see our terms on the Trading Club homepage for more information. And of course, as we said briefly, there are going to be losing trades. No system or strategy prints out winning trades 100% of the time. The purpose of Lance's work and our work here at the Trading Club is to help give folks an edge in the markets, and you shouldn't be trading with money that you can't afford to lose. So with that, hi, I'm David Mound. Today we're going to share a basic trade idea that could be worth $250 or more by Monday afternoon. In fact, if things go as I and Lance expect, it should hit our account at exactly 4 p.m. Eastern Time, not a minute later. And now that we have our trade set at 10 a.m., we put our trade in, let the market run its expected course, and as long as nothing crazy happens in the market, we should see at least $250 hit our account right at 4 p.m. Eastern. Now, I understand that sounds a little crazy, but look at our trade on March 11th. Anyone using this unique trade could have opened a quick position around 10 a.m., spent the next 6 hours working their normal job, and come back at 4 p.m. with an extra $333 in their pocket. Or how about the next day? Anyone following along could have opened their trade around 10 o'clock, spent their day running errands, come back to a $408 profit at 4 p.m. And how about March 14th? Once again, anyone leveraging this basic trade could have opened a position around 10 a.m., hit the gym, grab some lunch, I like sushi, and come back around 4 p.m. to get a $350 win. That's a total of $1,093 over the course of 3 trading days. And keep in mind, these trades did not come from a back test. They were not pulled from a study. These were real trades found and published by today's guest. In fact, over the last few weeks, he's posted 28 different payouts, each of which were delivered at exactly 4 p.m. Eastern Time. In fact, I'm sorry, and like on February 26th, we could have popped in our trade around 10 a.m., spent the day on the golf course, come back around 4 p.m. to see an extra $298 in our account. Or what about the next day? We simply set up the trade at 10 a.m., do what we wanted to do. I like the beach. Even though the market finished lower that day, we still would have come back at 4 p.m. to see an extra $369 in our account. We didn't have to time our entry. We didn't have to time our exit. We didn't have to hold the trade overnight. Our returns were posted right at 4 p.m. Eastern. Now, I'll admit, something like this should not be possible. It's all thanks to a unique phenomenon discovered inside the options market, and it allows anyone to target a daily payout, always delivered at 4 p.m. Eastern, like magic. Now, let me assure you, this is not some silly gimmick. This phenomenon occurs each day. It's driven by the market makers. It's always there. Folks just don't know how to leverage it. But today, that all changes. You see, our guest has promised to share this secret behind these 4 p.m. payouts. In fact, on Monday, he'll share a brand new trade targeting upwards of $250. But not just that. He's going to show us how to stack these daily trades to target an extra $1,000 per week. So if that sounds exciting, I'd like to welcome you to the 4 p.m. Payout Project. Now, if this is your first webinar with us, my name is David Mound. I'm a director here at the Trading Pub. And during my time here, I've seen dozens of strategies produced by some very talented traders. But this new strategy, this new style of trading really caught my attention. And I wanted to be here today and have Lance on with me because it has all the attributes of a strategy I trade myself. High success rate, limited risk, low hold times, easy execution, and affordable options. Most importantly, the chance to collect a payout each day at exactly 4 p.m. Eastern. Now, the man behind these 4 p.m. payouts is Lance Ippolito. If you've been with us for the past hour in the roundtable, you've already heard him talk today, and you may know him from many other things. He's arguably one of the best directional traders on the planet. As a hedge fund trader, he managed $30 million book on behalf of private clients. But since joining the trading pub, he showed our members nearly 1,200 unique money-making opportunities. Some of this year's best include an 87% winner on LUV in just 24 hours, a 125% winner on Verizon in a week, and even a 276% winner on CVS, and that one was overnight. I love it when the biggest wins are in the shortest periods of time. It's so great. But today he's doing something totally different from what he normally does. He's going to show us how to target a bare minimum $250 per day without trading in any particular direction. You see, unlike most trading techniques, the 4 p.m. payout plan is not dependent on market direction. The market can finish higher. The market can finish lower. The market can even stay flat. Yet each scenario still offers a chance to get a 4 p.m. payout. And that's why I've asked Lance to join us here today for this extra session to show us and walk us through some of the live trades, and so we can start replicating them in our trading starting on Monday morning. All you need is a basic trading account like Robinhood, Tasty Trade, Interactive, Charles Schwab, any of those, and a few minutes to set up the trade. And as long as the market runs its normal course, nothing crazy happens, we should see our payout hit at 4 p.m. Eastern time. So Lance, why don't you show us how the 4 p.m. payouts work?
Absolutely, David. I would love to. But before we get too far along, I want to be clear with everyone watching. You are going to see a lot of winning trades today. These 4 p.m. payouts have hit with a very high accuracy rate. In fact, we won 28 out of the last 29, about a 96% accuracy. 1,000 into each would be worth over $8,400. But that does not mean losses won't happen. If the market does something very out of the ordinary, it is possible to lose. So if you decide to trade with us this upcoming Monday morning, please don't over leverage yourself. You see, finding success in the U.S. stock market is not about closing one big trade every once in a while. It's about doing one thing consistently and watching the results compound. And that's what the 4 p.m. payout plan aims to do. It's a basic trade. Anyone can implement any day of the week, and all we have to do is set it up at 10 a.m., wait for the closing bell, and as long as the market runs as expected course, we could see our 4 p.m. payout hit. And it's proven to work in the best of times, and more importantly, even during the worst of times. It's not an exaggeration. For example, let's go back to February. It was one of the worst stretch in the financial markets we saw, losing $5.3 trillion in value, down 16 days in a row. If you had the money tied up in the market, you probably ended up in the red. If you bought options, call options, well, probably expired worthless. However, $1,000 into the 4 p.m. payout would have posted a different outcome. In fact, we logged 8 consecutive winners in a row while the market shed $5.3 trillion. Now, this is based off a $1,000 stake, but let's go over each trade. $298, $333, $400, $315, $330, $330, $408. And you see, we aim right around that 20, 25, sometimes even more percent if we can get it. That's our average that we want to get each and every day based on a $1,000 stake.
Lance, that's actually incredible. So while most folks certainly lost money during that period, your 8-day trade paid out 8 different times. In fact, it would have been worth a total profit of $2,764 based on a $1,000 stake in each trade. Now, to put that in perspective, it takes the average American 2 full weeks to make that much. That's roughly 80 hours of work. But you guys would have accomplished that with just 8 basic trades that take like 2 minutes each. And that's not even the best part. You see, Lance has not been keeping these opportunities to himself. He's been sharing them on his live YouTube channel. In fact, one of his followers from Arlington, Texas wrote in saying he made $42,000 replicating the strategy.
David, that's right. Now, obviously, that's an incredible return. For some folks, 42 grand is life-changing, but that man probably traded a little bit larger account in the 6 figures. But here's what's cool. You don't need to. You don't need to have a 6-figure account. You don't need much experience. You don't need to guess the direction of the market. We like to target that 250 per day. And if we can repeat that a few times per week, that could be an extra $1,000 at our disposal. Now, when compared to my normal strategies, it's very passive. We don't have to manage the options. We don't have to fight time decay. We don't even have to close the trade manually. Our returns are posted at 4 p.m. automatically, no matter what, win, lose, or draw. And that's why I'm here today. You see, earlier in the year, I took a very bad loss on a space stock lunar, about 15K. Gone, trying to time a directional move. Despite being an A-plus setup, the market turned against me, and it was one of the biggest losses I had in a couple years. But it was also a harsh reminder of just how challenging direction trading can be. There's so many variables you have to get right. You have to pick the right strike. You have to pick the right expiration. You got to time it perfectly. You got to exit perfectly, and you have to be right on direction. But with this new type of trade, we don't worry about any of that because the margin is so wide. We have such a big wiggle room, it's hard to be wrong. And that's why we've had that over 90% success rate. All we have to do is set up the trade at 10 a.m., let the market run its expected course. And if we go back to the middle of March, the market wasn't crashing, but it was choppy. The news surrounding tariff created a very volatile day in the market, and most people trading probably lost money or sat on their hands. But with us, it doesn't matter. We could go up, down, even sideways. In each scenario, it still allows us to target that 4 p.m. payout. If we go back to March 11th, market pretty much did nothing all day, slightly lower. Normally, you want to avoid a choppy market, but with this, it doesn't matter. The 4 p.m. payouts, as long as we place a trade at 10 a.m., that'd be worth $333 at 4 p.m. But let's jump to the next day. Again, slightly lower, kind of choppy. You traded direction, probably lost money. But for us, that was good for $408 at their account, 4 p.m. Eastern. That's very good, about 40% daily return. And we look to do this every single day. The 14th, we drifted higher, but it was kind of a slow grind. You know, maybe you bought call options, might have ate away your return with that time decay. But for us, we were good for $351 at 4 p.m. It doesn't matter. One more, market finished slightly lower. Call options probably lost money. Put options probably lost money too. But we were good for $538 at 4 p.m.
Lance, that's unbelievable. That's crazy. Despite the market posting 4 different outcomes, your trade posted 4 different winners. That is insane. Anyone who started the week with just $1,000 would have more than doubled it. In fact, they would have seen a total profit of $1,631 after just 4 trades. Doubling your starting stake, and we're looking at an extra $32.62. Now, folks, I don't want to sound cheesy, but it would be pretty great to see a few $100 hit our account at the end of each day, right at 4 p.m. Imagine finishing your normal workday just to be greeted by a bare minimum $250. That's money that could be used for any number of things. A happy hour with friends, your next Amazon purchase, the utility bill, a fancy dinner, that's up my alley. Whatever you're into, it doesn't matter. It's kind of like having a side hustle, without putting in the extra side hustle hours.
Well, David, that's only partially true. Despite our win rate being north of 96%, we still have to place the trade and let the market run its expected course. But that's what we're striving for. You see, the 4 p.m. payouts are designed to work in tandem with your life, not alter it. In fact, I tell people you don't even have to watch the market at all. If you have a day job, don't quit. If you're saving for retirement, don't stop. It's not what the strategy is about. It's about using a small portion of our current investments to target a daily payout each afternoon. Now, it won't make you a millionaire overnight unless you're a millionaire. It won't allow you to retire tomorrow unless you're already planning on that. But the goal is very, very simple. Collect about $250 each afternoon in hopes of making life a little bit easier. Now, if you want to target more or less, you absolutely can. We have people of all ages, skill levels, account sizes following the 4 p.m. payout plan. Glenn, starting small, 1 to 2 contracts, making $50 a day. Don, a little bit more. He did $446 on the trade. Robert, probably a bigger account with $4,500 a day. Some days he even did a little bit more. So it doesn't matter what your struggles have been in the past. It doesn't matter. Maybe you've been on a losing streak. This was designed daily to target a payout each afternoon, regardless of how the market moves. All we have to do is set up the trade at 10 a.m., let the market run its expected course, and David, we're good to go.
Now, Lance, that seems like you are sharing this strategy at a very convenient time because the last few months have been incredibly taxing. We're dealing with a totally new administration, a looming recession, potential trade war. I think we've heard something about tariffs once or twice, and a stock market that's lost a year's worth of returns in 4 weeks' time.
Yes, David, you're right. I know a lot of people are scared right now. Savings rates are down, interest rates are up, and people are struggling. The average salary here in the U.S. is about $4,500 per month, but we all know high mortgage payments, high insurance, transportation costs, and food, everything else. The cost of living is really about $6,083 per month. That's about a $1,500 gap. So it shouldn't come as a surprise that Forbes magazine says 60 million Americans are searching for additional sources of income. Now, in my opinion, extra $250 per day would move the needle for most people, but it would require a full-time job. And I know I don't have an extra 8 to 10 hours to work per week.
That's right. I don't have it either. But with your 4 p.m. plan, we have the chance to target a bare minimum $250 almost every day of the week. And with what you've shown me today, it wouldn't be a stretch to fill that $1,500 gap each month. Based on your average return, it would have taken just 5 trades. So Lance, why don't you show us how these trades work and how we can set one up on Monday morning?
Absolutely, David. I'd love to, but first, let me remind you, we are not perfect with any strategy. There's going to be winners, losers, break even. So never bet the farm, never go all in on a single trade. With our case, we don't have to. We've won each and every one of our last 28 trades except one. And that's not because we're doing anything overly special. All we're doing is aligning ourselves with the daily expectations of the market. Basically, and specifically, not only the stock market, but the market makers, the guys and girls who control the market prices. You see, no one has a better grasp on what might happen throughout the trading day than a market maker. Their entire job is to forecast the day's price action and then quote the options accordingly. Now, in order to do that, we use a special metric called the market maker move. It's a mathematical range that represents the market's best and worst case scenario for the day. And the way it works is quite simple. Each morning, the market makers will give us the highest possible price representing the best case scenario, also the lowest possible price representing the worst case scenario. You see, this range is supposed to account for all the possible events that would move the market in either direction. The good news, the bad news, economic data, global tensions, tariffs, you name it. But here's the thing. Unless something extreme happens, the market rarely ever moves outside its daily range. In other words, it almost closes somewhere in the middle. And that's where the strategy begins. We don't care which direction the market moves, higher or lower. It can even stay flat. It just has to stay within the range. And as long as it does, we collect our 4 p.m. payout. Let's go back to March 18th. The high end of the range was 570. The low one was 560. We were just looking for it to close somewhere in the middle. And sure enough, they were right. We closed at 561, well within the confines of the daily range. And that's good for us to collect our 4 p.m. Anyone following along could have seen $538 in profit hit their account at 4 p.m. You see, it doesn't matter if the market finishes up, down, or flat. It just has to stay within the range. And that happens a vast majority of time. In this example, the market sold off at the open and closed lower on the day. You traded direction, would have probably lost money. But for us, it didn't matter. We closed within our range, as you can see here. And at 4 p.m., we got our payout.
Well, that's pretty clever. An extra $538, all thanks to the market makers. But I know you personally took this trade too. In fact, you saw an extra $1,200 hit your account right at 4 p.m.
David, that's right. When you've done this as many times as I have, and we've been doing it almost every day since February 20th, your confidence is winning very, very quickly. I put $5,000 into the trade, and I saw, as a result, $1,200 hit my account at 4 p.m. Now, obviously, you don't have to put $5,000, though. You can take this daily trade with $100, $500, $1,000. It's up to you. The process is still the same. As long as the market closes within the market maker's range, we should see our 4 p.m. payout. For example, here's March 5th. The high end was 585. The low end was 574. We just had to close somewhere in between. And sure enough, the market makers were right. We closed at 584, and that was good for another 4 p.m. payout, about $408 at 4 p.m. And that's really the secret to this. You see, the market makers are smart. They set the range to contain for almost any major market move, the highs, the lows, and any surprises that might happen throughout the day. For example, the next morning, 580 was the high, 570 on the low end of the range, and that's a 10-point move, right? Pretty large. And that's by design. It's meant to capture most major movements that might happen throughout the day. And in this case, we knew the market could likely close somewhere in the middle, and we did at 573. That's great for us. Got another 4 p.m. payout. $1,000 would have seen $315 in profit at 4 p.m. But notice what happened. We actually had some tariff news, and the market sold off pretty aggressively. If you traded direction, you probably got stopped out, but for us, it didn't matter. All we had to do was have the market at 4 p.m. close within the range, and that happens upwards of 96%. We know the market makers will account for any major disruptions that might happen throughout the day.
Lance, that's pretty incredible. As a former market maker,
Jack was.
Jack was, yeah, that slide was in there for Jack. Jack told us that it's a very smart way to approach trading because the market makers rarely ever get it wrong. Yeah. The only way that they get paid is when the market closes within that range. And if it closes outside the range, they can lose money on the options that they've sold to everybody else who's buying them up. So that's why they'll do anything in their power to defend it. And a lot of times, they'll push the market back within its daily range to defend it.
Yes, exactly. Exactly. David, that's right. And we've seen that happen very, very often. For example, here's the top end of the range. In fact, it just happened Friday. It was 578. The low one was 567. And we closed at 576. So anyone who took the trade would have saw another 4 p.m. payout. But if you look here, what happened at the bottom end of the range, you see how the market bounced higher. The market makers were likely defending its integrity. In other words, they wanted to make sure the market closed within the daily range. And thankfully they did, because for us, we won another $333.
Lance, you never disappoint. Anyone who started the week with $1,000 would have doubled their account by Friday. In fact, they would have seen an extra $1,057 in profit after just 3 trades. And don't get me wrong, an extra $1,000 in your pocket is incredible, but that's not really the most impressive part.
Right.
You see, I looked at every trade you posted throughout March. In total, you recorded 17 wins and just 1 loss. Now, obviously, that's an insane feat. Very few traders can do that. But when you're not 100% reliant on direction, it's not nearly as difficult. In fact, let's walk through each week. Week 1, 3 wins, 0 losses. Week 2, 3 wins, 1 loss. Week 3, 5 wins, 0 losses. Week 4, 5 wins, 0 losses. Week 5, short week, 1 win, 0 losses. Total profit, and this is based on $1,000 risk per trade, $5,789.38. On an annualized basis, that's upwards of a $65,000 per year income, not including compounding. That's just $1,000 on each one. We're not taking the winnings from the last one and betting double on the next trade. That is without compounding. And here's what's crazy about that. Again, it's just based on $1,000. Now, obviously, I'm not saying we're going to see $65,000 worth of returns over the next year. It would be nice to know that that's going to happen. It's nice that it's possible if the trades work out in our favor. Which brings me to the trade Lance will share with us live on Monday. If it all goes to plan, we could see a bare minimum $250 hit our account at 4 p.m. Now, obviously, we'd never promise a future outcome, so please do not over leverage yourself. But if you'd like to join us, it's all part of daily trading program we call the 4 p.m. payout plan.
David, that's right. This unique strategy was designed to help target 4 p.m. payouts each day without relying on market direction. As long as the market stays within the range, which happens around 96% of the time, we should see our daily payout. And since we started this, it's been a massive success. We've seen people all different ages, skill levels, account sizes thrive during these crazy conditions, like Roger, $575, CT, $215 in an afternoon, Max on his Robinhood account, $690, Jeff, $950 in 2 trades. Kathy did fantastic, over $5,000. Doug, 10 trades, $7,258. Robert, $14,000 in 3 days. In total, we've been on fire, winning 28 out of the last 29, and anyone who invested $1,000 to each would be up more than $8,000 in profits. And keep in mind, that was in 29 trading days. Imagine what that would look like over the course of a year, or 2 years, or 5 years. And best of all, we do these, David, almost every single day starting Monday. I mean, you don't get more trades than this, because literally every day the market's open, we do these trades. But it's not a one-time thing. We set up this trade every morning, 10 a.m. So you'll be invited to join the 4 p.m. payout Telegram private channel. This is the headquarters where we post all the trade alerts at 10 a.m. and it will be delivered to you with full instructions and details. You just have to go and follow along. You can expect over 200 alerts over this next 52 weeks. That's 200 different trade opportunities where we're aiming for about $250. Win a 90+% winning rate. There will be on days where we don't trade. Could be a market holiday, could be a half day. But here's the beauty of it. We'll be trading the same ticker, the same expiration, the same time, everything the same. We keep it simple, so it's very easy to follow along.
Lance, I couldn't agree more. I've seen the trades, and they are very beginner friendly. If you can order a pizza with toppings, you can enter this trade. You're not trading iron condors. You're not trading butterfly spreads. You're not bouncing around from ticker to ticker. You're simply aligning your trade with the expectations of the market makers. And as long as the market finishes within their daily range, we should see our 4 p.m. payout. Just like what happened on March 25th. The top of the range was set at 579. The bottom of the range was set at 575. All we had to do was set up the trade by 10 a.m. and let the market run its expected course. And in this case, the market closed right in the middle of the range. You'll notice it made 0 gains that day. On the day, it's flat, but that didn't matter one bit. We still collected another 4 p.m. payout, $408. Actually, $428. And you take
David, you said it perfectly out there. That's what we aim to do out there. And we can start small. You can start with $100. You can start with $1,000. But maybe you doubled that stake. That would be maybe $5K. That would be worth over $2,692. So the membership does start at $23.49, but don't worry, I get it. Even though it's a great deal, even though you get 200 different opportunities, even though you get the private Telegram access, the live workshops, which we've been doing every morning, putting these trades on together in a Zoom room, the trade tracker, the master class, we have a few bonuses. Because today, David, we're taking that $1,000 starting stake, where we've seen $298, $333, and we're taking that $1,000 off the price. So my hope is that you can apply that towards your very first few couple of trades.
That's very generous of you, Lance. So basically, anyone who joins today won't have to pay the $23.49?
Nope. David, that's right. It's a one-time payment of $13.49. That's it for a full year. Given the challenges in the economy, day-to-day lives, the cost of living, we really hope this will help relieve some of that financial fears folks are experiencing today. In fact, my goal is that you can come do these trades every morning, 10 a.m., and maybe cover that membership fee. So if you'd like to join us Monday and every day moving forward, please get out your credit card right now. And here's why. You see, everyone who joins during today's webinar will also get access to my personal market maker indicator. This is the very same indicator I use to issue every trade we saw today. It will give you the daily range on your chart to help you select the trade, and it's played a huge role in our success. That's why I want to show you how to put it on your charts, how to install it, and how to use it more importantly. Now, they wanted to charge $9.97 for this indicator, but I said, no way, it's included with your membership fee. So here's what's cool. It doesn't just work on the market ticker, it works on all tickers, so you can use it for more daily opportunities. But keep in mind for folks who only joined today. So if you want to trade 200 plus trade alerts with us, get the market maker indicator all included for a one-time payment of $13.49. Click the link in the chat, lanceippolito.com/4 p.m. You can also click the link in the chat. All the details are on your membership page. And if you want to speak with a real life person, call our team 904-706-3539. Everyone who joins today will get the 200 plus alerts every single day and the market maker indicator included. So you can do this strategy with the full education, full training. We'll be meeting next week as well, each morning. So come get signed up now. You cannot afford not to do this strategy. It's very, very simple, beginner friendly. And remember, Monday, 10 a.m. and every day going forward, we send those trades out at 10 a.m. Do it. Get signed up with us, lanceippolito.com/4 p.m. But let me address some common questions. How much does it take to take the trade? You can start small, $100, and aim for about 20 to 25 bucks by 4 p.m. I always say that, start small and scale over time. How many trades a week should you expect? We have to say a minimum 3 to 4, but sometimes we do every day. April 7th, we were 5 for 5. They closed out at 4 p.m. for max profit. You can see our main goal is about that $250, and our weekly goal hit $13.29. Does this violate the pattern day trade rule? Do you need a big account? No, not at all. Since the trades close at 4 p.m. automatically, it does not count as a day trade. They automatically close, so we don't have to manually. It's not day trading. So you can start with a small account or, of course, a big account. What ticker are we trading? Not the SPY or QQQ or DIA, the diamonds. It's a special market ticker that trades for a fraction of them. Way better, cheaper prices, pay less taxes on our capital gains. And I would say it is the biggest index contract in the world where people all over want to trade it. In fact, we put together a special report sharing the ticker and the advantage of it. And that's straight from the CBOE. So they even have the report on their website. It's in the members area now, so you can read it before Monday's session. Otherwise, I'll send you Monday's alert right at 10 p.m. Now, how do I install the market maker indicator? It's a simple link. Copy, paste it, and works on your Thinkorswim platform, which is free to download if you don't have it. Literally takes less than 60 seconds. But if you need any additional assistance, we have a full team trained on our customer care service room. They're available 10 to 1 p.m. every Monday through Friday, and I've been helping them out. Do you need any special account permissions? So you can do this on a regular broker account. A retirement account is fine too. Most broker platforms is level 2 or 3. As long as you can do vertical spreads or credit spreads, you will be fine. So if you haven't clicked the link, do so right now.
Now, folks, if you're having reservations, I get it. Trading one strategy every day may not seem that logical to you, but the numbers speak for themselves. I can't think of many strategies that have won 96% of the time and still allow you to target at least $250 per day. That's why I want you to try the 4 p.m. payout plan. Try it for the next 14 days. If at any time within the 14-day window you decide the strategy doesn't resonate, simply call Lance's team and we'll refund your membership costs. Although I would be very surprised if that happened. Between February and March, this trade won 28 times with just one loss. The average return per day was $292. So far in April, we're doing just as well. I've seen countless success stories, and we have people in the chat right now throwing them at us from top students, both new and old, telling us how much they're winning with this strategy. Like Don, who's won 7 in a row with an average return of $450 per day. That's on an estimated stake of $2,000. Or GT, who's won his last 4 in a row. Or Giodi, who's made an extra $428 on a $2,000 stake in one day. Or Peter, who's nailed several for around $400 a pop. There's Mark, who made an extra $300 on one trade with a $1,000 stake. Or Dennis, who made an extra $1,780 in just 1 week. And Roger, who banked another $1,500 just on Tuesday afternoon. That's on a 5K stake. Or James, a 71-year-old who banked $4,700 and change on an estimated $20,000 stake. Mike, we're on Mike, who made an extra $58,000 in March. The success has been so crazy, I've seen other traders at our company take these trades too, including Graham Linman, who many of you probably know. He just did one contract of SPX the other day. He threw it on there. He made 100%. So, I mean, you can't do better, right? So if you'd like to join us, click the link that's in your chat. The first step to joining the program. When you do, you could be one step closer to joining some of Lance's most successful students. And remember, Lance will be sharing the next 4 p.m. opportunity in his Telegram channel on Monday. So if you want in on the action, go to lanceippolito.com/4 p.m. or click the link that's in your chat. If you have remaining questions, we're going to address them now. There were a lot of questions coming in during the presentation, so we're going to get to them. But just to kind of go through real quickly what's included in this, because it's a ridiculous amount of stuff for $1,300 and change. You're getting 200 plus Telegram trade alerts. So people have asked in the chat, is this every day? And we covered it a little bit here and there. It's not every single day of the month. There are market holidays, there are half days. There are times when there just isn't a good enough trade where Lance just doesn't feel like the return and the risk is there. And he's not going to put out a trade just to be able to say, I put out a trade today. That 96% win rate is not because Lance is putting out a trade no matter what. It's because he's putting out a trade when there's a good trade. So, but there are 52 weeks in a year. You're going to be getting 200 plus Telegram trade alerts. He's giving away, which is ridiculous, but he's giving away the market makers indicator. You don't have to use the indicator to do this program. You can just get the alerts to trade the alerts. But if you want to use the indicator to be able to find trades on your own, you're getting it for free. There's a 14-day money back guarantee. If for any reason in the next 2 weeks, it's just not for you. And we don't care if you made money. If it's just not for you, you can get your money back. 4 p.m. payout live workshop. So there is training available in the members area right this minute. If you buy now, you'll get the training available to you within minutes. But there are also live workshops that Lance has been doing every few days. I don't know. Do you know when the next one is, Lance?
Monday morning. We've been starting around 9:15 a.m. and we're usually
9:15 a.m. Monday morning
10:30
for a live workshop for everybody who's joining new and everybody who's been in it since the beginning too. $1,000 webinar discount. You're getting the ticker bonus report, the trade tracker access, trade room access, options criteria, install support, masterclass, so much more. You've got that customer service live access, so much. So let's go to some questions. There have been a few questions about brokerages that we didn't happen to mention. If you want to go into that.
Sure, you can do it on Fidelity, Robinhood, Interactive Broker, Schwab, every major broker platform has the XPX or XXP. We actually have a guide in the members area. Sometimes you have to put a $ in front of them or a period in front of them. We all have that in the members area, but any major broker platform, you can do this. Schwab, Fidelity, Robinhood, Interactive Brokers, Tasty Trade, E-Trade, all are fine. And we have people doing it on all these different brokers out there. So the tickers, it's SPX and XXP. If you're trading SPX, you want to aim for about $100 to $120 per contract. If you're doing XXP, which is just the mini, it's 1/10 the size of SPX. You're going to aim for about $20 to $25 per contract. So that'd be 10 contracts for $250, 2 contracts for SPX for $250. Yes, as long as you could do, Trish, a vertical spread, sometimes they're called a credit spread, you are good to go. Usually it's level 2 or 3 for most broker platforms. Some they have their permission set a little bit different. But I use
for those of you who
and Robinhood.
For those of you who don't have level 2 clearance in your accounts and you're not sure how to get it, I'm dropping a link in the chat right now. We have a guide on how to get level 2 options approved in your account. It's just kind of like what you need to tell them in order for them to put that permissions in your account. And you know, some brokerages are a little bit easier to get along with than others. So if you have trouble in one, you might be able to get it in another. And so on. We had a lot of questions about contracts, like how many contracts we're buying, and I think like and a few questions about what the risk is, like when we say $1,000 trade. So if you want to get into that,
I just cover that, David. So if you're doing SPX, you're aiming for 2 contracts will get you that $250, or 10 contracts for XXP. So your max risk is always going to be, if you're making $25, would be $75. If you're making, let's say, $120, your max loss for SPX would be $380. So it's defined risk. So there's no unlimited risk, which makes it a pretty conservative strategy for the market today. And if volatility goes up like it was in February, March, and April, that's great for us. We have a bigger range, so more wiggle room. If volatility contracts, it's still okay for us because we don't have so much crazy news and stuff, but we just have to get a little bit tighter in the range. The range contracts a little bit out there. So historically, a VIX over 20, you want to sell what we call premium or sell volatility. And that's why we've been doing so good with the results, because we've had the VIX over 20 since, February or so. They say, does the phone work, David?
The phones work? Yeah. So the phones work. We have a sales team. It's a smaller sales team on the weekend than on during the week, but we do have a sales team. If you're having trouble getting through on the phones, you can put your name and phone number in the chat. And as soon as the phones die down, because there are a lot of people in the room right now, a lot of people calling in. If you're having trouble getting through on the phones, by all means, put your name and phone number in the chat. That will lock in your pricing, and we will try and get a hold of you today. If we can't get a hold of you today, we'll try and get a hold of you tomorrow or Monday. As long as we get a hold of you by Monday, that price will lock in because you put your name and number in the chat. So you can do that if you'd like us to reach out to you instead of fighting with everybody else on the phone lines. If I'm going to run through a couple more. Purchase online, you certainly don't need to do that. You can just go to lanceipolito.com/4 p.m. You can get in right this minute. And within a couple of minutes of purchasing, whether you do it over the phone or you do it online, you'll get an email with a link to the members area and access to all that stuff right away. And then obviously Monday morning will be the next live trade. So there were some questions if you could explain why it's not considered day trading. I know we talked about it briefly.
Right. So since it's an index and it expires at 4 p.m., we're not day trading. We're not buying a spread. We're not selling a spread back. You put it on at 10 a.m. and that's it. So it doesn't count as a day trade. Day trade is when you buy and sell the same security in the day, and you get 3 day trades in a 5-day period. We're not doing any kind of day trading, since we only put the trade on at 10. And since the market closes at 4 p.m. and since they're an index that's cash settled, it does not count as a day trade. So it's a real cool. Once you trade this way, you'll never go back to like the SPY trading it again. And lots of tax advantages. It's cash settled, so it's an index. So if it at 4 p.m., the broker will automatically, since it expires, it cash settles it. So there's no assignment of stock. You don't have to worry about getting shares of stock or anything like that. And so it's a big
So
advantage.
for a few of the people who are asking like kind of real specifics about how to actually put the trade in and everything, we're not going to go into the details of that right now, but all that training is in your members area. And Monday morning, you're going to do it live with Lance in a live trade room. So if you want to kind of understand exactly how the trades get entered into your brokerage account, that's in the training right now. When you join, you'll get a link to the members area. You can go in there, you can watch the videos, you can go through the training. And you should understand it pretty simply. Lance lays it all out, but he will be live Monday morning about 45 minutes before the trade comes out to go over everything and answer questions and all that as well. So Brent chimed in that he made $2,500 in the program in the last 3 days. So that's awesome, Brent.
And Francina has get it. It's the best thing ever. Thank you.
Right.
Love
So for the people asking about like having to be there at 4 o'clock, just to reiterate what Lance just said, you don't have to close these out on your own. You set them around 10 o'clock in the morning. It doesn't have to be exactly 10. You don't, like it doesn't go bad at 10:01, but you do need to do it in the morning. And that's the one and only thing you need to do each day is set that trade in the morning. It will naturally expire at the end of the day. And if the market didn't go nuts, you'll have money in your account from it.
Yeah, I tell people don't even look at the market throughout the day. Yeah. Don't look at it. Or don't look at the ticker throughout the day, because win, lose, or draw, you don't have to do anything at 4 p.m. So sometimes, going out to lunch or going for a walk or not being in front of the screen is the best thing that you can do. Lou says, what is the max loss at the end of the day? So if you're doing SPX and let's say you get $1.20, so $120 per contract, your max loss would be 5 minus $1.20. So that'd be 380. If you do XXP, let's say you get 25 cents, it would, since they're dollar wide, it'd be 1 minus 25, which would be 75. So the indicator only works on Thinkorswim, because Thinkorswim, we tried other platforms, but nothing is a full service that could get the market makers move. But in the members area, I show you how to calculate the market makers move every day on any broker platform. But the display of the strikes and the market maker indicator is only on Thinkorswim, which is free to download for research purposes. You don't have to have a broker account with them or anything. We have no affiliation with them. But I show you how to do it on any broker platform.
And to reiterate for Louis, there's never a risk of assignment on these. There is no underlying stock on these, so there's nothing. It's almost like a loophole. This whole thing, but I don't like using that word because it sounds nefarious. But like this is kind of like the exception to how everything else works. Like you can do these trades; they're going to expire at the end of the day. It's not day trading. There is no underlying stock. It's an index, so there's nothing to be assigned. No assignment risk.
Exactly.
All right.
Yes, administrator, correct. Yeah, like Brent says, very conservative. Yes, the up and down arrow is displayed on the indicator along with the market maker move. Exactly. Jasmine, what's kind of plan trade level do I need? Usually level 2 or 3, depending on who you use, Jasmine. And then we place the trades at 10 a.m. Eastern time each morning. Let me see, David. I think we have a couple more questions I might have missed.
I got most of them. Let's see. Francina says, "Get it? It's the best thing ever."
Yeah, I know. I love her name too, by the way.
Yeah. All the times are Eastern. Every time we've talked about this entire presentation, it's always Eastern time. I mean, that's what the market runs on. So 10 a.m. Eastern is when they come out, and they close automatically at around 4 p.m. Eastern. So, at exactly 4 p.m.
Annette, I did not see your question. I apologize. If you want to retype it, I'll get to it. When you say sell premium, what does that mean? So selling premium means selling a credit. So usually when you buy a stock or buy an option, you're paying a debit. When you sell premium, you're getting a credit. So you're getting that money up front. And then once it settles at 4 p.m., when we say collect your payout, that's what we mean. The trade is settled, so that money gets deposited in your account. So
Ryan,
historically,
I got your number. Sorry, go ahead.
Yeah, historically, a VIX over 20, you want to sell premium. That means sell options. VIX under 20, you want to buy options. That's kind of the rule of thumb, so to speak. But yeah, Ned, if you want to post it, I'll get to the question. Let me scroll up to see if I missed it for you. I do apologize. I don't think I saw it.
While you're looking for that, so these are all calls, right? There are no puts involved in these.
No. They are. So we do calls and puts. It depends on the day. If we get an up
on the
arrow,
payer side.
yep, it depends on each day, and that correlates to what the VIX is showing. So yes, we do both calls and puts. So we'll either do a bull put credit spread or a bear call spread, depending on the day. And then we'll do that right outside the market maker's move.
Yes. So for those that are worried about like not being able to, if you're in Canada and you can't use Thinkorswim or whatever, granted the indicator is a nice thing to have that Lance is throwing in here for free. You don't have to use the indicator to do this program. It's just an extra value add. If you're out of the country and you can't get Thinkorswim account, unfortunately you won't be able to use the indicator. But that's just this is one of the many value adds that's in the program. The crux of the program are the alerts that Lance is putting out every day, and that obviously you don't need the indicator for. So unfortunately, you won't be able to use it if you're in Canada, but it's not the end of the world when it comes to the program.
I don't want to say your last name, but with the SPX assignment, it might say you got assignment, but since it's cash settled, you really don't get assigned because it's cash settled. There's no like stock for you to take. It just might be their verbiage of how they word it, and it's probably an automated message that they send out there. We do the SPX and XXP every day at 10 a.m. Yeah.
Yeah, Tasty Trade's not a problem.
Tasty Trade works perfectly, Linda.
As long as you have that level 2 permissions in your account, yeah. And Greg asked a question. So if they were to manually close a trade out prior to 4, it would then count as a day trade, right?
Yes, if you manually do it.
Yeah.
But
the idea,
we usually don't.
But one of the great things about it is the idea here is you don't need to manage these trades. You've got defined risk. It's not unlimited risk. You don't have to catch it before it goes wild and you just lost, half your account. These are
no timing, risk. No timing the market, nothing like that. You don't have to buy it low, sell high, none of that. Jack says this is a great way to build cash for small accounts. That's what's fantastic. You can do it with a small account. In fact, we encourage at least starting small, do 1 or 2 or simulator to demo and build your repetition over time and grow over time, right? You don't ever want to go push all in each time. As you can see, you'll probably see on my Telegram, some days I push a little bit more, some days I push a little bit less, depending on, each day and what's going on. But definitely try to, when you get signed up, start small, learn it. There's a little bit of a learning curve. And that's why we've been going live, David. We went live, Tuesday, Wednesday, Thursday, Friday last week. And then I think this week we're going live Monday, Tuesday, Wednesday, Thursday, all in the morning sessions. So we can. When can you push big size? Oh, we'll let you know in the Telegram channel what days. Hey, we got a real good day today. We have a real big range. We'll let you know. And each morning at 10 a.m., we're going to start getting a little bit more detailed in the alerts of, hey, small size, bigger size, stuff like that.
And Lou said you don't even close it out early if it's profiting big, right?
Yep. Bob, so since it's cash settled, it will take the price minus the strikes, and it will automatically settle that way. So there's no like stock assignment, nothing like that, since it's cash settled. If you don't have options experience, we do have an option guide for you included in the members area. And we have so much trainings. I did a 10-part video series. I'm walking people each morning how to do it, starting at 9:15 till about 10:30. So we do have lots of education materials that you can look at. Robinhood is fine to do out there. Mason, because at 10 a.m. is volatility is the highest, so that's when we put on the trade. So that would be either 2 contracts for SPX.
There was a question about a replay of the roundtable this morning. I kind of flew by me, but if you drop your email address in the chat and just put roundtable replay, we can get a link out on the roundtable replay. Customer service is not in today. Sales is in today, but customer service is not. Customer service is just Monday through Friday. So if you have a customer service issue, you're welcome to drop it in here and we can pass it on. But you can also email support@thetradingpub.com, or you can call in on Monday. Let's see. Roundtable replay. Gotcha. So Brent was just saying in here that for people that are brand new to options, that it's very simple, it's very easy, but you might want to paper trade for a couple of days. Yeah, so paper trading is basically, you can, in almost any of these brokerages accounts, you can ask for a paper trading account. It's just their fancy name for a practice account. And with a paper trading account, you basically put the trade in exactly the same way you would with live trading, except that no real money's on the line. But you get in the trade and you get out of the trade automatically through their same system, and it shows you what you would have made or lost the same way as if it was real money, but it's all just practice. So if you're brand new to it, you can ask for a paper trading account in addition to a regular account, and you can work in your paper trading account until you feel comfortable that you know what you're doing and that the program is working, and then you can start trading with real money. So good suggestion, Brent. We usually say that at some point during the webinars, but we hadn't gotten to it yet. For those asking for a replay, we will definitely need your email address. I don't have your email address just because you're here. If we don't get access to that through Zoom. So if you want a replay, you can't just say replay. I do need you to give me your email address. Do you sell vertical? Do you do vertical sell, call, and put, and not a spread?
So Jasmine, it would be vertical. It would be a vertical spread. It would be called. And it depends. Sometimes we do a bear call spread, sometimes a bull put credit spread.
All right.
Brent says very simple, very easy. But for some, you might want to paper trade for a couple of days to fully understand. Exactly. Judith, level 3, just, I don't want to say it's better, it just gives you more access. Thank you. Appreciate the kind words, M. Are there futures on XXP? So futures get taxed the same as SPX and XXP. We're not doing the futures. If you want to, you can use the range to trade the futures, but we do the index, so SPX and XXP as the two tickers we do. So small account, I would do XXP, and then larger SPX.
All right, we've got a lot of people asking for replays. I'm not going to be able to answer you individually, but we are collecting your email addresses over here. Those who want a phone call as well. So don't worry if we haven't addressed you individually. Also know that if you ask for a phone call, that they're going to have to wait until like all the inbound calls die down a little bit before they start making outbound calls. So if you don't get a call right away or haven't gotten one yet, don't be too concerned about that. We will make sure the team gets your information and gets to you. Let's see. I'm just collecting addresses right now.
Okay.
So if there are any questions there that you want to grab.
Sure. Let me get to the questions here. Brent says this has become one of his primary daily trades. So thank you. We appreciate that.
Oh, here's one.
Good job.
Talking earlier about SPX versus XSP. One's for smaller, one's for larger. Can you just kind of define when they should jump from one to the other?
Yeah. So with XXP, you could start with $100, so to speak. What I tell people is this: if you're doing more than 20 XXP contracts, so that would be anywhere between $400 to $500 you're looking for a day in profits, go ahead and do the SPX. Just from a commission point, it's cheaper. For example, if you want to aim for, let's say, $250, that would be 2 SPX contracts. That would be 10 XXP contracts. So your commissions, obviously, on 10 contracts would be more than 2 contracts, right? So I mean, really, it's just preference. We give you both in the trade each morning at 10 a.m. But, you know, obviously, we want you to save the most money as well. So you could do it either or, really. But I would say, you know, if you're only trading, let's say, $1,000 or $2,000 account, use the XXP. You know, if you're trading a, I don't know, 6-figure account, obviously use the SPX. I mean, you could do both too, but we wanted to make sure, you could do both from small to big accounts.
Actually, I have a question for you, Lance. Is there ever a time when it's better to do the XSP because the strikes are different?
You have a bigger range with SPX than XXP. So it's the strikes are 5. For XXP, they're only 1.
Right.
So that, yeah, and then sometimes, every day is different. It really it's just 1/10 the size. XXP is just SPX at just 1/10 of it. I mean, that's the official way it's worded. A net, we have those in the members area for each program with trade trackers out there. I don't have access to all that information on the top of my head, but that would be in the members area for the programs in the tracker section.
Yeah, if you're asking about programs you're in, you can find them in the members area. If you're asking about programs you're not in to prospect which one you should get in, then you'd have to contact support. They have all that information at their fingertips.
Yeah, exactly. Louis,
sales, rather.
It would be a credit. Louis, it would be for a credit each as a credit spread each day. Technically, Sherling, not more risk. It would be the same percentage risk out there. It is just a bigger contract. So I guess if you say, a bigger contract, technically, if you want to word it more risk, yes. But from a percentage point of view, they're both exactly the same. All it is 1/10 the size of SPX.
Did we talk about the VIP at all, Lance? I don't think we talked about the VIP. I'm going to drop that.
I don't know. Maybe
I don't think we did. I'm going to drop that in here real quick. So I can't remember if we covered it or not, but you've got a couple of different, whether you're buying online or whether you're buying in the over the phone, you've got a couple of different options here. So 1 year, as it shows on the screen, we dropped the price of the 1 year of the 4 p.m. payout plan to $1,349. Instead of that, you can spend $300 more and buy the 2 year for $1,649, or you can spend $300 more than that and buy 3 years for $1,949. So you got 3 options when you go to that order form at lanceippolito.com/4pm. You can buy 1, 2, or 3 years, and obviously you're getting the bigger value the more years you buy at one time. No matter which one of those you choose, on the next page, on the second page of the order form, you have an opportunity to upgrade to a VIP membership. The VIP membership is a lifetime membership. You'll never have to pay another renewal fee again to stay in the program. In addition to not having to pay for it ever again, it's also obviously the best value because you're getting all those years for a much reduced price. And it's transferable to someone else. So if you decide to stop trading or just stop trading this strategy, or you wanted to leave it to somebody in your will when you stop trading altogether, you can do that. You can pass it on to somebody else. It's a lifetime membership. So that obviously is the best value. It's $2,500 all in. So no matter what you do on the first step, 1 year, 2 year, 3 year, when you go to do the VIP, it'll just be the difference between whatever you paid on step 1 and $2,500. And if you're calling in, you can just go straight to VIP if you want. You don't have to do it in 2 steps. It's still $2,500. So no matter which way you get there, $2,500 gets you a lifetime membership to this program, 200 plus alerts every year for just $2,500. And it's transferable to somebody else if you want to do that eventually. So that is obviously the best value. That price, I don't know how long that price is going to be, $2,500. That it's a very, very low price for a lifetime membership to a daily trading program. We do have programs that trade like once or twice a month, and they're not quite, the lifetime on that's not quite as high. But for something that's giving you almost daily trades almost every day, all year long, $2,500 is like a ridiculous, if you only do it for 5 years, you're paying $500 a year. So it's crazy. Can the lifetime membership be added during the 14-day trial? So you're asking Judith if you can buy it now in like 7 days, call in and get the VIP. You can, but I can't guarantee the price. I don't know if the price will still be the same. So not a pressure tactic. I just don't want to say yes, and then you call in a week from now and they tell you it's a different price. So you can definitely get the VIP. You can get it within the 14-day window. It'll be available after the 14-day window. Um, I just don't know the price if you don't buy it on the webinar or during the webinar period this weekend. Right now it's $2,500 all in. I don't know what it'll be whenever you decide to do it.
Awesome. Thank you, David, for sharing that. David, do you want to grab the screen here?
Sure.
You
got to run?
Indeed, my friend out there.
All right.
And I appreciate you, David, so much for hopping on Saturday. So
I appreciate you doing it
so much.
All right. Have a great weekend.
Stonkamania is my some days I'll go live on YouTube at 3:30 p.m. It's my affiliate. Where is he? Trading gimmick wrestler profile Stonkamania. We'll post that when we go live. I try to do it almost every day at 3:30 on YouTube, but I've been a little bit busy out there. So he's running wild just in Clearwater Beach.
All right, Lance, have a great weekend, buddy. All right, folks. So we're gonna close this out in just a couple of minutes. If you have any last minute questions or want to put in your email address or phone number to get a replay or a phone call from us, you don't need to do it if you another time if you've done it already. Just if you haven't done it yet and you want to, then you can go ahead and do that. Just so everybody knows, we had a ton of people asking for replays. It didn't seem worth it to keep track of who wanted a replay for this and who wanted a replay for the roundtable. So just everybody's going to get a replay for the roundtable that happened this morning and for this presentation. So once it's all rendered and put up online later. I don't know if it'll be later today or not, because it is a weekend. I'm not sure if they're going to have the time to do it today, but as soon as all this gets rendered and put up online, everybody that gave me their email address will get a replay link for a combination of the roundtable session this morning, which if you're not familiar with it, it's just something we do the first Saturday of every month where we have several of our guru educators, just basically for a roundtable discussing, the news of the day, the market of the week, and anything that they feel is, they just want to bring to people's attention and just kind of what they're focusing on for the week. So if you've given me your email address, or if you still want to give me your email address, you can, and we'll get you a link to both replays. It may be one video or it may be two videos. I'm not sure how they're going to do it. So if you only get one link, don't be too worried about it. It's probably going to be a link for both, because we did run like directly from one event into the other. So it's actually all one recording right now. I don't know if they're going to split it up into two separate replays or keep it as one. So I just want to put that out there. If you're only looking for the replay of this presentation and it starts with the roundtable, just jump an hour ahead, an hour into the roundtable, or like an hour and 6 minutes into the roundtable. We started the presentation for 4 p.m. payouts. So if anybody has any questions about 4 p.m. payouts that they haven't asked or that we haven't answered, even if you've asked a question, if we haven't answered it, we missed it. So drop the question in here. Hopefully I can answer it without Lance. I'm pretty familiar with the program, and we'll get it answered. And if not, we can always get you an answer from Lance by email or something like that. So just collecting addresses here. This program has really, really been doing very, very well. And for anything to be having over a 90% win rate in like the current volatility, the current craziness, is honestly, for me, like for my trading, it's just kind of like a relief. Like I know, like at least I got this one trade I don't have to worry about. I put it in at 10 o'clock in the morning, and I don't even have to like worry about. I'm still watching the market anyway because it's the thing I do, but like I don't have to worry too much about what's going on. I don't have to watch my trade. I don't have to worry about what to close it out. Um, let's see. Scott, you asked me to reserve the price, but I need your phone number to do that. And you gave me your email. We'll send you the replay on the email, but I do need your phone number to reserve your spot in the program for the weekend. And we will try and get a hold of you by phone. Just grabbing all of these replay requests. Glad everybody's interested in seeing all this stuff again, or maybe seeing the roundtable if you missed the roundtable. Ralph asked how you use the MMM for longer time frames. So like part of the problem with that is like the time frames don't really like I don't think you really want to extend the time frames out on this program because they're all 0 DTE options. I'm not 100% on that. You're welcome um, to email in to support at thetradingpub.com and ask that question, and they can get you an answer from Lance. But I think generally speaking, on this particular program, you want to stay focused on the one time frame, but I could be wrong. So administrator asks, what's your favorite programs, David? Well, listen, this is a cheesy kind of cliche answer, but it doesn't matter what my favorite program is because everybody has different trading account sizes. Everybody has different risk tolerance. Everybody has a different amount they want to be watching the market, different number of trades they want to be in on any given day, how much time they want to put into trading in a week. Like there is no favorite program that's going to be everybody's favorite program because even if one program is doing the best by sheer, let's say, percentage return, right? It may require you to day trade. It may require you to have an account that somebody else doesn't have account size for. It may require you to watch the market all day. It may require that you have a higher tolerance risk because it has a lower win rate, but it has a higher overall return. Like there's so many factors that really picking the right program for you is really about calling our sales team, telling them what your account size is, what you like to trade, how you like to trade, what your time availability is, what your risk tolerance is, and have them go through. They have charts of all of these different programs that we offer from all of these different experts, and they can help you select something that's the favorite for you or the perfect one for you. It sounds like a cop-out answer. Like I could tell you what I like to trade the most. I don't want to because it may not be right for you. It may not be right for you. So uh, it's really a very personal, not personal like private, but like it's very individual, decision on that because everybody has a different set of circumstances. It may not be 100% unique. I'm sure in the thousands of students that we have, your situation probably occurs, across more than one student, but it's going to be very different than the student that happens to be right next to you, so to speak, or going to be different from me, most likely. So let's see. Does join now require a phone call or an email? I don't see a screen to join. So if you're not seeing the screen being shared, it may have changed when I took over from Lance. There should be a view button at the top of your screen, or if you're on your phone, I'm not sure exactly where it is. You might have to swipe left or right to see the screen, but I can very easily post the information again to join in the chat right here. But basically to join, you're either going online to lanceippolito.com/4 p.m., the number 4 p.m., or you're calling 904-706-3539. Or third option, give me your name and phone number, and we will have one of our representatives call you as soon as the inbound calls die down a little bit. So you got 3 ways you can join. Go to the website, call us, or give me your number and we'll call you. And again, if you haven't gotten a phone call yet, it's just because the phones are really busy and they haven't had an opportunity to go outbound yet. Dorley asks, how many programs do I trade? Me personally, I don't know. I don't know how many. I follow probably, well, I follow probably 2 or 3 from each of our instructors, each of our gurus. So I probably trade about 20. But again, it's very individual. I don't trade a lot on any given trade. I make very small trades. I don't trade any of the trades that require, very large investments where I have to have, 100 shares of the underlying stock or anything like that to cover options or whatever. But, there are a lot of programs that we have that require as little as, under $100 or a few $100 per trade. And what I really like to do is be involved in a lot of them. I feel like even though I'm not necessarily investing in a lot of different, in some ways I'm investing in a lot of different sectors in the market, but a lot of them are indexes and things like that where I'm not really diversifying as far as like, buying different commodities versus buying the dollar and the Nikkei and the whatever, and versus buying stocks and different sectors, whatever. Not necessarily diversifying in that way, but I'm diversifying kind of as far as whether a strategy is following direction or it's non-directional. I'm diversifying as far as whether one person might think that something's going to be bullish and something's going to be bearish. Something else might cover me if we're going flat. I like to kind of follow a lot of different strategies, and they each have their own, win rates and things like that. But by putting kind of the same amount of money in each thing, day after day or week after week, depending upon what, whether it's a daily strategy or not, a weekly strategy. Uh, One thing that I will say I think is very important for everybody is that you trade consistently. And by that, I mean, you don't put a ton of money, or I should say a ton of money. If you have a ton of money, you can put a ton of money. You don't put a high percentage of your account on any given trade, no matter how good it looks. Now, that's a different percentage for different people because they have different size accounts and different risk tolerances, right? If you have $1,000 account, it's going to be hard to put 1% of your account on a trade because there aren't too many $10 trades. But you're going to spend $100 or maybe $200 max per trade if you have $1,000 account or $1,500 account. If you got a $10,000 account, I I still wouldn't spend a whole lot more than that on any given trade, but it gives you the opportunity to get into a lot more trades. Because if you have a $10,000 account and you spend 2% of your account on any given trade, that's $200. It gives you the flexibility to get into slightly more expensive trades by having a $10,000 account compared to a $1,000 account. But I wouldn't put 10% of my $10,000 account on, on too many trades because it reduces my ability to sustain consecutive losses. There will be losses. You will not win every trade. This program from Lance has a ridiculously high win rate. It's 96%. Will it be 96% forever? I don't know. But most programs don't have that high a win rate. And even the ones that don't are still very good programs. They're still very profitable overall. But you need to be able to sustain those losses. And so if I have a $10,000 account and I put out 5 trades at $1,000 and things don't go my way that week, I can't handle that significant of a loss, that half my trading account in a week. I can't handle that very well. So I would rather put a few $100 in each of those 5 trades that adds up to $1,000. And worst case scenario, if they all go against me, I lost $1,000 that week, not $5,000. So, my trading risk tolerance is going to be different from other people's. How much money we have are going to be different. How many different trades we want to be in at any given time is going to be different. So anyway, that was probably a longer answer than you needed or that everybody else wanted to listen to. But hopefully that kind of gives you an idea of like why I'm not going to tell you, hey, this is the best strategy. Hey, this is how much you should be putting on a trade. Like the big thing is be consistent. And one other aspect of be consistent is if I'm trading any given strategy, let's take Lance's 4 p.m. payouts. Whatever I'm putting on Lance's 4 p.m. payouts today, it's what I'm putting on it. Well, today's Saturday, but you know what I mean. Whatever I'm putting on it in a given day, I'm putting on the same amount for 4 p.m. payouts every day for at least a month. Because if I start going higher, lower, then A, I'm emotionally reacting to what happened yesterday, which is not how to trade. And B, that the win rate and the overall return could very well be elevated by my doing that, but it could also very well be lowered by my doing that. Because if I put more money on the ones that go against me and I put less money on the ones that go with me, now my win rate is less effective because I'm kind of putting it all out of balance. You want to make sure that you're trading the same amount of money on any given strategy for a decent period of time. For me, that's at least a month. For some people, that might be 3 months or 6 months that they don't change how much they're trading on a given strategy. Some people, it's 100 trades that they do before they change how much they put on there. And 100 trades could be a different, variable amount of time depending on the strategy. So um, you want to be consistent so that those percentages work out, particularly on the ones that don't have a 90 something percent rate, win rate. A lot of our programs have a 70 or 80 something percent win rate, which is still excellent. And the thing is, how much do you win on the wins versus how much do you lose on the losses? That's where you get screwed up if you're constantly changing how much you trade, right? Because if the win rate is the win rate, that's how often you're going to win. But the profit factor, and not, some of you are familiar with profit factor, some of you aren't. The profit factor is how are your wins comparing to your losses. That's what gives you that overall average of, with my wins and losses put together, how is this strategy doing for me? If I win 3 times more on my winners than I lose on my losers, then I need at least a 75% win rate, right, to kind of be able to uh, or I should say, if I win as much equally on my winners as I do on my losers, then I need at least a 75% or over a 50% win rate to be making money. If it's, double or triple, then I need to be winning more and more and more. If I start playing around with how much I'm putting on each trade, it throws the whole thing out of whack. And it's like impossible to keep track of. So you just want to make sure that you are putting a consistent amount of money on a given strategy, trade after trade, for a significant period of time. And then if you've grown your account to a point where you feel like, hey, I can risk more on that strategy, then up that amount a month later or 2 months later or 3 months later, and then be consistent with that higher amount for a couple of months. All right, I'm done. I'm done on my soapbox. If you collect 25 cents credit on SPY, if you lose, then you're losing the whole dollar. No, you're losing the difference. Yeah, you're correct in the second half of that, Shirley. You're losing the difference. Um, but it's not on SPY per se. It's on, if it was 25 cents that you're looking to collect, it would be on XSP, which is not exactly the same as SPY. So you want to make sure you have your tickers correct. But I mean, it is the index, but it's a slightly different asset that you're buying. So on XSP, it would be the 5 minus the dollar or whatever, the $1.20 that you're shooting for. So it would be like, 380 would be, so there's a $5 like spread on the SPX. And if you're shooting for the $1.20, then it would be the 5 minus the $1.20. If you're doing the XSP and you're shooting for 20 cents, it would be the dollar spread minus the 20 cents. So it would be 80 cents or 80 bucks on the full thing. All right. Thank you, everybody. I think we have everybody's email address and questions answered and phone numbers. Last chance. Anybody needs anything? We're going to close this out in 2 minutes. One thing I can tell you is that, Lance came up with this strategy for like a couple of different reasons, and a couple different things went into coming up with a strategy. But like one of them was, the fact that like he's a very directional trader. He's very good at doing direction. Most people shy away from direction as much as, don't do directional trades as much as Lance does. But with the market the way it's been, and with the administration and President Trump and just all the different things, other countries having so many factors right now. There's so much volatility that it was like, okay, we need to be able to make money, like a slightly different way. And his other trades are still doing well, but like this is a strategy for the moment for sure. Anyway, thank you for the compliments to everybody who's saying there was a great presentation. I'll give most of that credit to Lance. I'll take a little bit. Let's see. Shirley says you're going to call to upgrade to VIP. Yeah, absolutely. You can always call in. Certainly, if you buy the 1 year, 2 year, 3 year now, and you want to trade it for a few days, and you want to upgrade to VIP after that, you're going to need to call in to do it to try and get the same price. The VIP price won't be the same. Like it won't be available directly online. Um, let's see. Nice. Katura said 3 days in the program and seeing some profits in the small account. That's awesome. You grow it slow and steady, and eventually you'll be where you want to be. How can we see the cost of each contract? So that's all in the training. It'd be real difficult for me to go through it quickly now inside of a minute or two. But when you join, you'll have the training in the membership area. I can show you the membership area if you want to see the membership area. I can take a minute to do that. Hold on a sec. So when you join, you'll have access to the membership area and you'll have immediate access to the training that's been done already, the pre-recorded training and some of the recordings of the live sessions. And then there'll also be the live session 9:15 Monday morning. Let me get to the program in the members area here. Let me get to, oops, sorry, it's going to take me a second because I clicked the wrong thing. So for those that are brand new, what we have is something called the one-click trading. One-click trading is just like the name of our membership platform that we use to provide all of the different programs. And so once you join, you'll get a link to one-click trading and to like set up your membership and so on. Like your login for it and everything. And this is it'll look very similar to this. Let me put this on the screen. It'll look very similar to this. I have a few like menu items that you won't have. And all of the programs from all over different gurus are in here. So if you're in more than one program, it's all in one place. You can, obviously if you're only in 4 p.m. payouts, that'll be the only little icon you see at the top. But if you are in multiple, you can quickly search for the one you want. And this is the members area. It'll show you, it'll be an area for the alerts. It'll be an area for all of the different training for the trade tracker to install the indicator, frequently asked questions. Here are all the videos for like, here's a start here series. It shows you two right here, and you can click on more up here, or you can click on 10 items. It'll show you all 10. And you've got all these different videos from Lance. This is video 1 out of 10, 2 out of 10. Obviously, it continues. There are 10 of them. Quick links and manual links for installing the code if you want to install the master indicator in your Thinkorswim platform. Recordings of the trading sessions, training guides, all this stuff is in here. How to get in touch with us, all the support stuff. So all of that's available to you the minute that you join. And then you'll have the live session. The next live session won't be till Monday, but you'll have all of this available to go through the weekend. I love doing the weekend webinars or like a Friday night webinar because it gives everybody the weekend to really dive into this stuff. Not that I know what your weekend schedule is and how much time you have, but in my mind, everybody has a little more time in the weekend for this kind of thing than they do during the week, unless you're retired, and then great for you. But it gives you the weekend to go through this training material and really be kind of like introduced to it and studied up on it. And it's just the word familiar, right? Familiar with it for when you do the live trade session with Lance on Monday. So let's see. You'd like a Zoom user, I would like a VIP membership. How do I apply for this? Okay, so if you're not in this program yet, you can get the VIP membership by going online and buying the 1, 2, or 3 year, and then on the next page, upgrading to lifetime. Or call the phone number on the screen and in the chat, 904-706-3539. They can give you lifetime over the phone. If you already own 4 p.m. payouts and you just need the lifetime upgrade, you need to do it over the phone. But there's no link to just get the VIP without buying more of the 1 year, 2 year, 3 year stuff. So if you already own it and you just want VIP, please call the phone number or give me your phone number and we will call you. If you haven't purchased at all, you can still call the phone number or give me your phone number, but you also can do it online. If you haven't purchased at all and you're not a member yet, you can go online, buy the 1, 2, or 3 year, and then on the next page, upgrade to the VIP. Hopefully that answers your question and clears it up. And Jack, if I didn't answer your question directly about like seeing the cost of each contract, that's what's like in your brokerage account at any given moment, and that's what's in the training. You'll see it in the training. The training includes like the video of like the brokerage account and what it, what the going like strike price is and stuff like that for the options. It shows you all that stuff. And again, Lance will be going over it live on Monday. Lanny asks, will membership appear along with Jack Carter and Nate Tucci? Yes. So the one-click trading platform. So Jack Carter and Nate Tucci are part of Prosperity Pub. Prosperity Pub is a sister company or brother company, depending on which way you want to go. Doesn't really matter. With the Trading Pub, and all of those products are actually in the same membership platform, one-click trading. So if you have stuff with Roger Scott, Lance Ippolito, Chris Pulver, Jeff Smith, Nathan Tucci, Jack Carter. I'm trying to think who else. We have a bunch of other gurus in there as well. And if you have with any of those guys, you will see them all in one place, basically in your membership area. Judith asks, what is VIP? VIP is just kind of like Kane. Thank you, Dorley. Kane, forgot about Kane, Shay. VIP is just kind of like the name for the lifetime members. We call them VIPs because they have the program for life and they get everything the program contains. Like sometimes we give like little bonus things to the lifetime members. So you're a VIP if you buy a lifetime membership. They're synonymous. VIP and lifetime are synonymous. Now, we do have something called All Access, which is not synonymous. All Access is a membership to all of a particular guru's programs. So we do have like Lance Ippolito All Access, which means every program that Lance does now and in the future, you will have access to. So if you own one or two of Lance's products and you're interested in owning all of them, you can get what's called an all access pass to Lance. And that would be everything that Lance has now and in the future. So if you're interested in an all access, you can call that same phone number or you can put it in the chat right now that you would want to speak to somebody about all access. It is certainly not an inexpensive investment, but it is, a huge discount over buying all those different programs, individually. And it's future proofed. So if you, for example, if you owned Lance's All Access last year, like you bought it last year, a lifetime All Access membership, when this 4 p.m. payout plan came out, you got it for free. It just got added to your account because you're a lifetime All Access member to Lance. You get everything he has and everything he ever does. So for that one price, you get all access to that guru's products and programs. So for those people that owned Lance's All Access when the 4 p.m. payout program launched like a week ago, they just automatically got it. They didn't have to pay the $13.49 for a year. They didn't have to pay $2,500 for lifetime. They just got it. So the All Access Pass is kind of the next level of being part of this trading group and really getting absolutely everything that a particular instructor offers. And so if you're brand new, like we normally don't even bring that up on the webinars because like if somebody's brand new and this is their first program with somebody, like all accesses would be kind of a ridiculous thing to really discuss because just going from 1 year to lifetime is kind of like a leap of faith and a commitment in something that you haven't even tried yet. So going from lifetime membership of 4 p.m. to lifetime membership of everything that Lance owns, that's a big leap. How much is it? It depends on what you already have. You kind of get credit for like what you already own with Lance, and our sales team has to do that for you. It's not something I can assess over a webinar. So let's see. Ellie says, can I get the VIP lifetime at the $2,500 total price if I call within the 14-day window and I start the 1 year today? I can't promise you that. I can promise you that you can get VIP for whatever the current VIP is minus what you paid today for the 1 year. So if you call within the 14-day window, whatever the VIP is when you call, right now it's $2,500. I don't know what it'll be 12 days from now. But 12 days from now, when you call, if it's $3,000, it'll be $3,000 and you'll get a credit for the $1,349 that you spent today because you're in the 14-day window. If you want to get it definitely for the $2,500, I can only guarantee that today or actually through Monday. If you give me your name and number, we can lock it in through Monday. I can't lock it in for 14 days. And it's really not a pressure tactic. I know like that might sound like a cop out. It really isn't a pressure tactic. The price is set through Monday. We don't have a forecast for when the publishers are going to change it a week from now. So I don't know what it'll be next weekend or the week after that. But you will, within a 14-day window, I can promise you a credit for the $1,349 that I can do, and you'll pay the difference. I just can't promise you the price of the VIP, except through Monday if you give us your name and number. You can lock it in through Monday with your name and number. That's just how it works. So unfortunately, I can't do much better than that. What I can tell you is that if you buy the VIP, you still have the 14-day money back guarantee, and you could roll it back to a 1 year. That's not necessarily a great idea financially. I'm not sure I'm promoting that idea, but if you wanted to buy the VIP, if you spend $2,500 on the VIP right now, you have 14 days to get your money back. So you have 14 days to lower it to a 1 year if that's what you wanted to do. They'd rather give you half your money back than all your money back. They definitely lower you to a 1 year. If you get the program and you're like, you know what, I'm not sure I want this lifetime. Maybe I just wanted to try it for a year. You could roll it back within the 14-day window. It's not quite the same as guaranteeing you, an upgrade price, but I can tell you that. All right. I think hopefully we've answered all the questions and shown you everything we can show you. And if you're still on the fence about whether to get into this, what I would suggest is give me your name and number, lock in the price through Monday, and when they call you, hopefully you can get any other questions you have answered and make a decision then, or postpone it, whatever you want to do. All right, Scott, I got your info. Alrighty, folks. Well, that's the webinar. Hopefully, we've answered all your questions well and provided you with enough info to make a decision whether you want to get in on this program or not. I suggest everybody write down the phone number that's on the screen so you have it after we close out the webinar, 904-706-3539. We still have over 100 people in here after, almost 2 hours of being on the air. So I appreciate you guys sticking with us and spending so much time with us, sticking with us to the end of the webinar. But I'm sure with over 100 people in here, as soon as I close the webinar, at least one of you is going to think of a question immediately that you should have asked while we were in the webinar. And if you have the phone number written down, then you'll have a way to get an answer to your question. All right, folks. Have a great rest of your weekend. And I hope to see you on Monday in the live trade session, 9:15 a.m. Eastern Time with Lance. The link for that is in the members area when you join. All right. Take care, folks.